Welcome to the European Market Open. A minute to go until the start of cash equity trading. I'm Francine Lacqua in London with Tom McKenzie.
And here are your top stories. NASDAQ rally, tech powers US equities to the biggest two-day jump since 2020. European futures point to gains at the open. Johnson under fire. A report criticises failures over Partygate as the Prime Minister faces growing Tory fury. Plus, UBS beats on net income, announcing a $5 billion buyback. More of our interview with the CEO, Ralph Hamers, this hour.
Tom, first of all, happy Lunar New Year. It is the first day, of course, of the Tiger year. So I don't know whether that brings good luck to the markets. Certainly, futures are pointing to higher start. The focus is firmly on that volatility. NASDAQ getting a pretty big two-day gain actually yesterday. And the focus is also on some of the game makers after Sony bought one of the biggest developers out there.
Yeah, indeed. Xinyan Kuai Le, as they say in China, when it comes to Happy Chinese New Year, Chunjie Hao, and all that for our Chinese viewers. In terms of what's happening in the markets, as you're saying, Fran, there is that volatility. We saw that reflected in the NASDAQ, certainly. That 6.6% gain now in two back-to-back sessions. The S&P posting its strongest back-to-back sessions, 2 days of gains that we've seen of April 2020. So again, repricing, but we're getting towards the end of the market. So how much of this is about adjusting portfolios as we get, of course, to the end of the month? We are now in February, but maybe that was repositioning. And also some focus on the options markets as well. We had some Fed speakers come out, the likes of Daly and Esther George coming out, and maybe pushing back on some of the more aggressive commentary, more aggressive forecasts when it comes to the Fed. Still a lot of uncertainty over the pace of rate hikes, but the markets are pricing in 5. In terms of how things are playing out across the European markets, then the futures are pointing up. So that's what we're getting in the first few seconds of trade. The IBEX over in Spain is up 0.9%. Italy is posting gains of 51 points. In terms of France as well, similar trajectory. The Ftse 100 here in the UK gaining 0.5%. Again, we're going to be breaking down the consequences of Boris Johnson of that report, pushing back against some of his backbenchers and even the former Prime Minister yesterday taking a swipe at Boris Johnson. The politics of the UK remains in focus for us. Let's switch on and see how things are playing out then across the different asset classes. We look ahead to the futures after those 2 days of very solid gains, we were saying, for the S&P and the NASDAQ stateside, now pointing to losses of 0.1%. Treasuries have been bid just a bit. You'll remember this time yesterday, your 2-year was at 119, currently at 117. So yields just coming off a little bit at the front end. The 10-year again below that 180 level at 178. The flattening remains across this yield curve. And then the dollar index is down at 0.2%, reflecting again that slightly risk-on sense that we're getting across these markets. In terms of the pound, we're keeping across sterling, of course, given the politics here in the UK. 134 hasn't really moved on the back of the travails of Boris Johnson, currently up 0.3%. The ruble remains in focus around the geopolitics. We know that Biden's going to be speaking to the Russian Foreign Minister Lavrov. Currently, the ruble up 0.2%. Brent at $89 as we look ahead to OPEC+. Goldman Sachs saying $90 a barrel. It may force them to up production. Can they actually do that, though, is the question. And Bitcoin, by the way, in the last few days has staged something of a rally, coming back to 38,000, currently up 0.1%. Fran?
Yeah, Fed officials really said that they want to, avoid some unnecessary stock market moves. They're certainly disrupting the U.S. economy as they prepare to start increasing interest rates, and that is taken as maybe they don't do that 50 basis points move in March. Now, the companies that are moving the most, tech definitely leading the gains after what we saw in the NASDAQ, gaining some 1.3% in terms of sector, the biggest movers. Materials, next biggest gainer, up 1.2%. Communication services, the weakest, but still gaining some 0.2%. And I have to say, we have a lot of earnings, Tom, from for the optimists out there. The corporate earnings outlook continues to underpin, of course, the case for stocks. And then I was looking at some of what we heard so far. 80% of U.S. companies that have reported so far this season have beaten or met projections.
Yeah, that is important, isn't it? Because that was always the focus for many analysts out there. Will the earnings continue to sustain amid this higher growth trajectory for the US economy, for the global economy, even as monetary policy starts to become less accommodative? In terms of those corporate stories then, and of course, Mccartney has been across this, and we'll get the CEO interview shortly, but UBS Group posting a solid beat for the most recent quarter and announcing that $5 billion share buyback, doubling it for 2022 and adjusting and updating their targets as well for wealth and digital. We'll get more on that interview, of course, in the next, across this hour, in the next few minutes. Airbus gaining 1.75%. That's despite the fact that Boeing has struck a mega deal with Qantas for carriers, for freight carriers. Despite that, Airbus is gaining close to 2%. This is seen as a bit of a loss for Airbus, Boeing taking the lead in terms of that deal with Qatar Airways, I should say Qatar Airways for that freight deal. In terms of the eyewear maker, EssilorLuxottica, they have come out with a 1.5 million bear buyback in terms of shares, buying back about 1.5 million. Currently, this share is gaining more than 2% for that eyewear maker across Europe. Francine, it is Chinese New Year. You've just come back from Italy. You've come back with a bag of chocolates and goods, so we're all on a sugar high, but it's great to have you back in the studio on this important day, of course, for the people of China as well.
Yeah, it is. I was looking at some of the numbers, Tom. I know you're the expert, of course, on what exactly this means for local trips, but pre-pandemic, I was reading it's 3 billion trips actually in these 6 days, which is incredible. If you're a European or a US, citizens, you forget the sheer size, of course, of China. Now, because we're still in the pandemic, it's 1.1 billion trips, which is still quite an extraordinary number.
Yeah, it's the biggest example of human mass migration on the planet ever, bar none. But as you say, as a result of the restrictions in place in some of these cities across China, that number is going to be reduced this year. So a lot of people having to stay home, not being back with their families. So that is a challenging time, but it is a huge event, of course, across this week.
Yeah, it is. So we'll be tracking it and, of course, bringing you the very latest from China. Now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Australia's central bank is scrapping its 15-month-long quantitative easing program, but says the move doesn't imply a near-term increase in interest rates. The Aussie dollar and bond yields whipsawed after Governor Lowe pledged to remain patient in assessing inflation pressures. Nomura has posted a 39% slump in third-quarter profit after the firm's trading business posted lackluster results, adding to signs that the heightened market activity spurred by the pandemic is slowing. Japan's biggest brokerage said revenue from its global markets division fell 13% year-on-year. The results extend a tough financial year for Nomura after it was shaken by the Archegos collapse. The UAE is to impose a federal levy on corporate earnings for the first time next year as it dismantles its tax-free regime. The measure comes as the Gulf nation seeks to align itself with new international rules on minimum tax rates for corporations. Its new 9% rate will come into effect in June of next year. That's the Bloomberg Business Flash. Tom, Francine.
Okay, Laura, thank you. Let's get into some of the key market drivers then with our markets editor, Christine Aquino. Christine, we saw this come back in terms of the NASDAQ, the S&P as well. Will this be sustained or is it a one-off move as people adjust their portfolios to the end of the month?
Well, Tom, it is shaping up to be a positive day in Europe, especially after that NASDAQ rally. And I note that this week we could see stars align for a better week for some of these higher growth sectors that have really been battered in January. I think, the combination of a better earnings picture, as Fran mentioned earlier, the fact that we're seeing the NASDAQ rally flowing through to Europe as well. And we're also seeing more calls for buying the dip at the moment. And of course, the Federal Reserve rate decision is a few weeks away still, and the key decision, of course, being in March. And so we're really gearing up here for just a little bit, I think, of a relief week. And of course, add to the fact that the Chinese markets are closed for most of this week, which means that any negative price action in the U.S. probably won't get as much traction and carry over into Asia. All of that speaks to me a potential for a relief rally for this week.
Yeah, Christine, I have to say, what happens to value trade from now? And actually, the focus is firmly also on Ukraine, which the markets is largely discounting as a risk event.
Absolutely, Francine. And I think just the idea of some of the geopolitical risks also fading into the background, and the markets kind of gearing up for a bit of a recovery from quite a brutal January. I think, everyone's ready for a little bit of relief here, and we're seeing that very much in Europe playing out this morning.
Christine, we're currently seeing UBS gaining 6.2% after that earnings beat and that determination that basically they're going to be upping their share buyback, $5 billion, so doubling that for the year of 2022. So that positive set of results for UBS, just underscoring that earnings picture as well. In terms of the macro picture and monetary policy, the RBA coming out with something of a surprise. So ending quantitative easing, but the message from Philip Lowe and team was they still believe in transitory when it comes to inflation.
Absolutely, Tom. And I think what we're really seeing from the RBA is an effort to divorce its quantitative easing program from its rate hiking cycle, right? These are two levers that they've tried to leverage over the last few years in employing monetary policy. And the message was clear from the RBA that these are two separate things. Now, the question is whether the markets believe that. And that is yet to be seen, because we've definitely seen markets pushing other central banks with a similar sequential sort of policy like the ECB into raising rates perhaps faster than they may have planned.
Bloomberg's Christina Kino joining us with the very latest on the markets. Now, also joining us is Grace Peters, Managing Director and Head of Investment Strategy at JP Morgan Private Bank. Grace, thank you so much for joining us. A lot to talk about with, of course, the markets pricing in possibly a 50 basis points rise from the Fed. Does it matter if it's 50 or 25, or are we more focused on some of the earnings and valuations out there?
It's a combination of both. I mean, if we think back to where we were at the start of 2021 and how far we've traveled in terms of that hawkish central bank pivot, you can see why the market is struggling to digest some of this. And we've got two components that we think about. The first is the corporate earnings piece. As you mentioned in the earlier segment, Francine, we've seen some 80% of companies beat, and we're also seeing lots of measures around the health of corporate balance sheets when it comes to share buybacks, capital investment, and all of that good stuff when it comes to the corporate earnings piece. Now, when it comes to the valuation picture, that's really what's driven markets. And we've seen US equities derate from 23 times forward earnings in June of last year to now some 19.5 times. I mean, that's only 1% higher than the 5-year average. To us, that's gone far enough. So with corporate earnings being strong, we think that the market can move higher here, digesting, the Fed and other central banks who have obviously made this hawkish pivot. So we would be in the buy the dip camp.
You're in the buy the dip. I mean, that's still the debate that's going on. I don't want to put you head to head with the team at Morgan Stanley, but we had Wilson coming out, Morgan Stanley, saying we remain sellers of rallies. The S&P fair value is at 4,000, currently looking at 4,500 or so for the S&P. What do you see that they are not seeing to give you that belief in buy the dip?
So we think that the S&P is heading more for 4,800, 4,900 over the course of the next 12 months due to that combination of earnings and multiples really holding from here. We're not expecting multiples to rise again. So I think where we would argue probably is in the strength of the corporate earnings cycle, and also the incremental buyer of the market being the corporates themselves. We're firm believers in innovation. We think that the pandemic has really catalyzed a new wave of innovation across the market, which means that you're looking for growth at a reasonable price, not growth at any price. So I think the key question to us is when you're adding back, where do you add back? And we're mindful of, we have pulled forward some of this mid-cycle phase. We're looking more at a later cycle environment where you want to focus on those secular growers. But growth at a reasonable price can be in both tech, healthcare, but also in some cyclical parts of the market like industrials.
But Grace, so how are you expecting inflation to pan out? And actually, what's the best way to protect yourself against inflationary pressures?
Yeah, so undoubtedly inflation's higher this cycle than last cycle. We're seeing developed banks around the world, coming around to that view. And so when we're thinking about the portfolio, the equity piece of it is about that balance between not just the secular growers that benefit from low real rates, but also the more cyclical parts that are correlated to rising yields. So financials would be a great example of that. Outside of the equity book, then you can also look to infrastructure-driven assets, other real assets, real estate, even hedge funds as well as something that we've used to ballast our core fixed income allocations. And all of that leaves you much better positioned for a higher inflation backdrop. Not runaway inflation, that's not the base case, but a modestly higher inflationary backdrop that we think you should certainly expect through this cycle. capital.
Okay, so how to adjust to that higher inflationary backdrop, as you said. We'll get more calls from you on the UK and Europe as well, just after the break. Grace Peters, Managing Director and Head of Investment Strategy at JP Morgan Bank, staying with us. And coming up, UBS announcing that $5 billion buyback, sending shares higher. That's after posting better than expected results. More with our interview with CEO Ralph Hamers next, plus an exclusive conversation with EU Commission Vice President Valdis Dombrovskis later this hour. He visits Ukraine to announce a new support package. This is Bloomberg.
Did Delta fundamentally change the sort of infrastructure of hospitals and medicine generally in India, or was this just a short-term phenomenon and things reverted back to the mean?
So it did change. I think from a preparedness standpoint, how the hospital infrastructure sort of geared up for it, and whether it was oxygen requirements. I think most hospitals have put up liquid oxygen plants, temporary plants. Some have put up permanent plants. I think the capacity for oxygen and other, medicines and supply chain has been augmented, enhanced. So from that standpoint, I think there's been expansion in capacity in infrastructure. We've all sort of seen how far we can stretch the envelope.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. This week, find out how CFO Luca Zaramella is using local knowledge to help Mondelez grow its global portfolio.
I know our people, I know our customers. We tend to believe that all consumers are equal. They are not.
Chief Future Officer, brought to you by Workday, Wednesday on Bloomberg.
If you have surplus capital, it doesn't need to be used for further growth, then you should redistribute it to your shareholders. And that's why the message is there today.
Progressive is the word that's used around the dividend and payout. In terms of how the market sees you, are you trying to push out ahead as the payout bank of choice?
Not necessarily. I think what we are looking at is literally our strategy. So the market was waiting for, okay, where's the strategy going? Our strategy is to build that global ecosystem for investing. Now, building that ecosystem with our clients, with new contributors, does not need a lot of capital to grow. We grow it. It will grow in income. It will need some capital. It generates a lot of capital. Now, if it generates a lot of capital and it grows, you can do two things. You can continue to pay a handsome dividend and redistribute to your shareholders if you have a capital surplus situation. And that's what we do.
Inflation plays out in wages. Christian saving is seeing an increasing war for talent. Are you?
I think we're all in the same market here, right? So where we see some pressure on our workforce, we see it in the US. We see it a bit in wealth, Asia Pacific, because we are the leading wealth manager in Asia. And we see it in investment banking across the globe, in the banking sphere. Now, clearly, we pay competitively. We pay for performance. We have the talent to make our plan. And to the extent we need to pay up, we will do so, as we have done so last year. Having said that, we have a very good and attractive culture to work in as well. So I think there's more recipes than just pay to make sure that the people stay.
But if I look at the bonus pools around the world, Deutsche Bank up 15%, Goldman's, JP Morgan 40 to 50% up. What kind of percentage do you see the bonus pool at UBS rising this year?
I can't give the percentage yet, but it is increasing.
Well, 2020 was up by 24%.
Yeah, it is not as much as that this year. It is about paying for performance. That is what is important. And if people perform, they get paid well. And if they don't, they don't. Now, clearly, the market has done really well. We have done really well in the market, so the pay is up.
Okay, Bloomberg's Mccartney speaking to UBS CEO Ralph Hamers after they released results that beat estimates, sending shares are much higher this morning. Last time I looked, up more than 6% for UBS. Grace Peters, Managing Director and Head of Investment Strategy at JP Morgan Private Bank, is still with us. Grace, a lot of people we get on the show talk about the value opportunity within financials as we shift to this rotation to a higher rate environment. Do you align with that view? And if so, what is the window for opportunity to get exposure to financials? How much is priced in at this point?
Yeah, we do agree with that view, but I think it's more of a trade than something we'd want to sort of structurally own over a period of time. I mean, financials are an incredibly cyclical part of the market. When we're looking for, companies that benefit from rising bond yields, particularly steeper curves, then financials do well. And so they're checking the box at that point in time. I'd say more fundamentally, and particularly relevant for the European banks, we have seen an awful lot of capital rebuild, which speaks to the strength of the system. It reduces systemic risk. And it does mean that, as we're starting to see now, that we can start to see, dividends growing, we can start to see share buybacks, and therefore those valuations come to the fore. So we've got holdings in US and European banks, but I'd say that this is something that we're thinking about on a few quarter view rather than necessarily a few year view when it comes to that positioning.
Grace, I have a number of questions, but we're also running out of time. So the sell-off, was explained at the beginning of the year because of the Fed, but also geopolitical tensions, which the market is now largely discounting. But then we don't really know what the relationship between the US and China is also going to be coming up ahead. So are we underestimating these big geopolitical shifts?
Yeah, I think that it's one of those things that underscores the reason why valuations have fallen. When we look across the market, it's a slowdown in growth, it's a repricing of central banks, and it's also the political risks that you reference. I think at the end of the day, what we find time and time again is that it's corporate earnings that drive equity markets and risk assets broadly over a long period of time. So certainly it's in the ebb and flow, and it's important not to be complacent and thus to balance the book, to not just be pro-risk positioned, something we're watching but we feel comfortable with at this time.
Okay, Grace Peters joining us in studio. That's refreshing. It's great to have you in place in situ. Grace Peters, Managing Director and Head of Investment Strategy at JP Morgan Private Bank, still thinks the buy the dip works, but you've got to be disciplined when it comes to these valuations. Coming up, UK Prime Minister Boris Johnson faces fresh fury from his own Conservative lawmakers after a report into partying in Downing Street. We're live at Downing Street next. This is Bloomberg.
Welcome back to the European Market Open. Now, the UK Prime Minister Boris Johnson is facing fresh fury from his own Conservative lawmakers after an official report into Downing Street lockdown parties slammed failures of leadership and judgment at the top of his government.
But firstly, I want to say sorry. And I'm sorry for the things we simply didn't get right, and also sorry for the way that this matter has been handled.
But we now know that 12 cases have reached the threshold for criminal investigation, which I remind the House means that there is evidence of serious and flagrant breaches of lockdown.
So either my right honourable friend had not read the rules, or didn't understand what they meant, and others around him, or they didn't think the rules applied to number 10. Which was it?
I told him that I thought he should think very carefully about what was now in the best interests of our country and of the Conservative Party. And I have to tell him he no longer enjoys my support.
Well, let's get straight to our UK government reporter, Joe Mays, who's at Downing Street. Joe, I have to say, hearing a lot of Tory MPs talk like that is something that we haven't really seen in the past. There will be a lot of meetings, of course, between insiders at Downing Street and Whitehall today. What are the chances that the Prime Minister gets ousted this year?
Well, the chances are pretty high, you would say. I mean, we're still waiting for this police probe, which will probably have more details that could be potentially terminal for the Prime Minister. I mean, yesterday we had the update from Sue Gray, some general findings, which were pretty damning, saying there were failures of judgment and leadership in 10 Downing Street, serious failures to uphold standards. But for the time being, the Prime Minister does still have the support of the majority of his party. There was a key meeting last night with his MPs where he essentially won them round with promises to listen more and essentially showing off his charisma and what essentially won this Conservative Party's majority in 2019. But it all stems now on that final police probe, and whether that reveals details that are enough to make many Tory MPs think they should submit letters calling for his resignation, and that would trigger a leadership contest.
Okay, Joe, outside Downing Street with the latest, of course, on the implications of this Sue Gray report and what it means for Boris Johnson's future. Joe, thank you very much indeed. Joe Mays reporting throughout the morning on what is happening here in UK politics. The markets, by the way, currently across the European benchmark, you're seeing gains of more than 1%. The Ftse 100, just a bit of a laggard, 0.9%, gains of more than 1% across all the other benchmarks, every single sector apart from telecoms in the green. Coming up, we're going to discuss the rocky start to the year for IPOs. That story is next. This is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that The virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
From New York City.
We're in London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. The EU is set to approve a 1.2 billion euro emergency aid package for Ukraine. We speak to Commission Vice President Valdis Dombrovskis from Kiev this hour. Johnson under fire. A report criticizes failures over Partygate as the Prime Minister faces growing Tory fury. Plus, UBS boosts its buyback and goals after better-than-expected results at the investment bank. Tom, if you look at the markets, of course, they're discounting anything happening in Ukraine at the moment. Happy Lunar New Year to all of our Chinese viewers today. This starts a week-long celebration and, of course, the biggest migration on Earth. And then we look at what the Fed does in March.
Yeah, we have the colour coordination here, the reds and the reds.
We do.
Thanks to Francine, who was all on this, making sure I wore the red tie for the year of the tiger, or Lahu. Okay, in terms of what's happening in the markets then, we did have that incredible turnaround in terms of the NASDAQ 100 and the S&P yesterday stateside. Just in 2 sessions, you saw 6.6% added to the NASDAQ 100. The context, though, of course, is that for the month of January, you saw downside still of about 8% for that tech-heavy index. The S&P 500 boasting the best 2-day gain since April of 2020, but we are adjusting to this new normal and looking for more clarity. We did have those Fed speakers coming out, seemingly pushing back on more the aggressive stance when it comes to, or at least more aggressive views when it comes to these hikes. But nonetheless, the market's still aligned with this view that you're going to get 5 hikes. The question mark's around 50 basis points versus 25 basis points in March. That conversation is still live, even as you get a little bit of pushback there. In terms of how things are playing back then across the European space, the Ftse 100 largely brushing off the politics and the travails of Boris Johnson. We just were outside Downing Street talking about what this might mean for Boris Johnson's future. Currently, the Ftse 100 posting gains of 0.9%. This is more about a basic resources story. Copper is up. Oil remains close to that $90 a barrel level, and we're looking ahead to OPEC Plus on Wednesday, whether they have to ramp up production, as Goldman Sachs predicts, to meet that increased demand. Across the benchmark, you're seeing gains of 5 points, or just over 1%. The DAX is gaining 183 points. The CAC current is up by 70 points, or 1%. Let's switch it on and see how things are playing out across the sectors then. And the boost that we're seeing from UBS, that very strong set of earnings, the fact that they're going to be doing a buyback of $5 billion US, doubling the previous target for 2022. Financial services gaining 2.5% on the back of that. Tech is gaining as well. The handover from Wall Street, almost 2%. One sector in the red, that's telecoms, down 0.2%. Again, basic resources is part of the mix when it comes to the Ftse 100 gains of 2%. So far, 30 minutes into the trading session. Francine, Wordle is the big headline for us as well. It's been bought by the New York Times. I know you're very competitive when it comes to all things Wordle.
Yeah, I mean, I find it actually very relaxing. And what was amazing in my market research, because it is, Tom, just to stay with the times and keep up with the kids in the newsroom that I play Wordle, is that it's actually also increased people playing Quirkle or Jot. Do you remember Mastermind? I guess it's half pandemic and half people wanting to use their brains, but not too much. It kind of, uses your brain enough to make it work, but doesn't make it fry.
Just the perfect amount of mental agility with Wordle. Now snapped up by New York Times. Will it prove to be a fad or a good investment for that news organisation? We will see, but nonetheless, it remains popular in this newsroom. Let's switch focus to what's happening in terms of IPOs and listings then. It has been a rough year so far, start of the year, all that volatility for IPOs. Globally, over $26 billion worth of initial public offerings have priced. That marks a 60% drop from the same period a year earlier. The prospect of rate hikes combined with slowing growth and geopolitical tensions adding to pressure to postpone share offerings. Joining us now is Gareth Mccartney, Global co-head of equity capital markets at UBS. Gareth, just give us the context, because last year was a stellar year for listing as an IPO. So how significant is this 60% drop-off? What does it tell us about the appetite in these markets and amongst these corporates for going public?
There's two key points for me. One, you made the point we're coming off historic highs in terms of IPO issuance. Secondly, the first part of the year is seasonally generally pretty quiet for IPOs, as a lot of companies wait to go off their full year numbers. So I think the key conclusion from those 2 points, it's too early to tell yet what 22 looks like, but I think historical context is important and seasonality is also important.
Yeah, and Gareth, not all sectors are created equal, of course. So is there a sector where you probably see more IPOs than others? I'm thinking of technology, because actually valuations still seem pretty strong there.
Absolutely. The IPO market tracks what we see in secondary markets. Last year, almost 40 to 50% of issuance was concentrated in technology, as investors were really looking for growth opportunities. My prediction for this year is we'll start to see that market normalize, follow what we see in the secondary market, and there'll be a rebalancing with other sectors actually likely coming up to challenge technology as the dominant force in IPOs globally.
Gareth, how much of this is about post-IPO performance as well? Bloomberg has highlighted the fact that 9 out of the 10 biggest IPOs last year are actually underwater from their listing day. And we're thinking of Rivian, we're thinking DD, we're thinking Robinhood, just amongst those names. Does that theme change this year as valuations come down, as investors become a little bit more disciplined?
Yeah, momentum plays a significant part in the IPO market as a whole. You're right to highlight there were some differentials in outcomes based on year-to-date trading from IPOs which listed last year. The net result of all of that, I think, naturally will be that the bar for investors will go higher, and therefore there'll be more scrutiny looking for probably larger IPOs to drive liquidity. Secondly, the quality of the business, and third, the visibility on the business plans all likely go up in terms of scrutiny, and that leads to a more selective investor base.
Gareth, tell us a little bit about the aftermarket performance of some of the companies that have listed. Is this something that chief executive bring up in their conversation with you? And if you look at the private equity, they're really holding on to companies before putting them back on the market to grow them at critical mass. Is this also a trend that will impact other markets?
Look, I think listing your company and going public is a very strategic decision, and that has multi-year implications. So I think that's the first critical point. I think the second point is it really comes down to, when you come public, having a credible business plan which you can then execute on in the aftermarket. And I think thirdly, you are clearly also, once you're public, subject to the same macro conditions that the broader market is. And there's no doubt you've seen a broader unwind in growth stocks at the beginning of this year. And it's natural that any IPO from last year, which resides in that ecosystem, will have the same impact with regards to trading. So you naturally start to track the secondary market once you've been listed for a period of time.
Gareth, where are we in valuations starting to match these market conditions? How much more catch-up is there to go? What's your assessment?
The reality is the biggest driver, in my view, for issuance and the equity market as a whole have been the interest rate backdrop that we've seen. There's a lot of debate at the moment as we're in this transition phase on what the Fed and other central banks' rates look like going forward. Usually you have a more volatile period. That's what we're seeing with the VIX up at 25 now as the market digests the likely path of interest rates. And so for me, that's really critical, with the health of the IPO market in mind, to figure out when the market gets comfortable with the progression of rates, and therefore what that underlying impact is to your question on valuations. And we can start to pin IPO valuations on robust secondary multiples, which again have factored in the interest rate projections.
All right, Gareth, thank you so much for joining us today. Gareth Mccartney, their global co-head of equity capital markets at UBS. I don't know whether you'll have more time to play Wordle Gareth, or not? That's really one of the questions that we're trying to figure out, whether you now need a subscription to the New York Times to be able to play that. Coming up, the U.S. and Russia's top diplomats are set to hold talks today over Ukraine. We speak to the European Commission Executive Vice President, Valdis Dombrovskis. He's up next, and this is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Welcome back to the Open, everyone. We're 41 minutes into the European trading day, and you can see we're seeing a nice liftoff for these European stocks, gaining between 1.2 and actually the CAC 40 gaining some 1%. Now, investors are really debating whether this two-day rise that we saw in the NASDAQ, pairing the worst monthly rout in the S&P 500, will continue against this wall of worry. I'm thinking of the Fed, of course, I'm thinking of growth hiccups and pandemic flare-ups. So we'll see what the week brings, but for the moment, technology stocks well supported, Tom.
Yeah, and so far, equity markets brushing off these geopolitics. Oil, not so much, keeping around $90 a barrel. But of course, the geopolitics centers around what's happening in Ukraine. And Estonia's prime minister says Europe needs to be strategic about following through with sanctions if Moscow does indeed invade Ukraine. Kaja Kallas told us NATO's unity in confronting Russia has already been a negative surprise for the Kremlin.
People have said it might be a bluff. So that he has no intention of attacking Ukraine again. But then, you know, the aim might be that he's just building up this capabilities and demanding or presenting ultimatums with this force. So we should definitely not fall into this trap.
And are you disappointed, perhaps, at the response that we've heard from Germany? You know, last week there was this huge controversy about sending helmets but not sending weapons. Is there a sense of disappointment across countries, like in particular yours, that are so close to Russia? You're almost the first line.
Well, first of all, we don't have an official response from Germany yet. And second, it's up to every country to decide how they help Ukraine. Our will is to help Ukraine with all the means that we can political means, relations, but also really the capabilities that we can give to Ukraine, because we definitely see that the situation or the European security begins with Ukraine right now.
And of course, the other big question I wonder is Nord Stream. I mean, we've seen this year the huge dependency that Europe has on Russia and how that makes it so vulnerable. In your view, when you look at Nord Stream, and I know this is a German project, but it does have implications for everyone else, is it time to perhaps take a step back and look at it and say, actually, this is a geopolitical weapon?
Well, we have been saying this since the beginning, that it's not the economical project, but the geopolitical one. So this is no surprise to us. We have used all the means, all the tools that we have to prevent that happening, and to be voicing out that the dependency on Russian gas is detrimental to the security of energy security of Europe. So we have been very vocal about this since the beginning.
That was the Estonian Prime Minister Kaja Kallas speaking to Bloomberg's Maria Tadeo on the ongoing tensions between Russia and NATO over Ukraine. Well, Maria joins us now. Maria, the million-dollar question, apart from this emergency aid package, which the EU could actually give Ukraine, valued at around 1.2 billion euros, is actually how do you inflict pain on Russia whilst at the same time not hurting EU countries that are very dependent not only on energy but also on metals, because we could see a freezing out of finance, metals, and also technology and luxury goods.
Yes, and Francine, it's 1.2 billion euros on top of 17 billion euros that the European Union has already provided to Ukraine. But there's a big question mark as to whether or not that's going to be enough. If you go back to last week, Francine, President Zelensky said that the country and the damage already inflicted on the Ukrainian economy because of all of this uncertainty and the turmoil that is ongoing would require 3 to 4 billion euros. So the question is, who is going to bridge that gap? And then, of course, as you mentioned, there's still a big, long-in kind of doubt about how hard the sanctions are going to go on this. It's interesting that Prime Minister Kallas says we need to go hard so that the price for Ukraine becomes so high that not even Vladimir Putin is willing to pay for it.
Yeah, well, let's get straight to the man of the hour. He is European Commission Executive Vice President and Trade Commissioner, Valdis Dombrovskis, just announcing this 1.2 billion euro economic aid package while visiting Kiev. He joins us from the Ukrainian capital. Mr. Dombrovskis, thank you for joining us. The challenge here, away from the emergency money, is, of course, how to inflict maximum pain on Russia, good morning, to try and deter them from invading Ukraine, whilst at the same time not harming EU countries that rely on gas from Russia. How do you do that?
Indeed, we need to work in two directions. On one hand, we need to support Ukraine, where, among other things, we are providing now this additional 1.2 billion euros macro-financial assistance program, and that's my main purpose of visit to Kiev, to discuss this in details with Ukrainian authorities. But in parallel, we are preparing also a massive sanctions package against Russia in case of further aggression, because clearly it needs to serve a deterrent effect, showing Russia that if it would opt for further aggressive actions, it will have a very severe consequences for Russia. When we are designing those sanctions, it's clear if you are going for massive, very serious sanctions, those are going to affect also EU economy. So we are looking in a sense how to maximize the effect on Russia and minimize the effect on the EU. But clearly there are certain interlinkages, and there are going to be some effects on the EU economy. In a sense, that's the price we have to pay if we want to preserve the peace in Europe.
And Mr. Dombrovskis, of course, you have been in Ukraine. I know you met yesterday with Prime Minister Zelensky. You say that there will be an impact on Europe, that is unavoidable with sanctions coming in. I wonder, do you get the impression that countries that could be really hit, like Germany, are willing to take perhaps the short-term pain to protect a democracy, or a country like Ukraine that's clearly looking to the European Union for help?
Indeed, now all EU countries are working on this sanctions package, and I would say there is a large degree of unity that we need this very serious sanctions package to dissuade Russia, and all EU member states are willing to act.
And Mr. Dombrovskis, with this package that you're putting the final touches on 1.2 billion euros on top of the money that you've provided since Crimea was annexed, it's interesting to me that on Friday, President Zelensky said the country needs 3 to 4 billion euros to stabilize the economy. Do you worry about a credit event in Ukraine? In your conversations with Mr. Zelensky yesterday, is that 1.2 going to be enough?
Indeed, we discussed it yesterday both with President Zelensky and Prime Minister Shmyhal. First of all, this macrofinancial assistance program is to be seen in a context of other support which other donors are providing. Our macrofinancial assistance programs always work in tandem with IMF programs, and Ukraine currently has a standby arrangement with IMF and is going to work on another program after this IMF arrangement expires. There are also other international donors working, including US. The EU support which we are providing is the largest indeed of any other donor. Indeed, since 2014 we have provided mobilized some 70 billion euros of support, and we already have announced that we now came with this in a sense emergency macrofinancial assistance, but we are ready to work already on another further macrofinancial assistance program, which is going to be in a sense longer, focusing on strengthening the resilience of Ukrainian economy.
Commissioner, what is the EU doing to release or reduce the reliance, the European reliance on Russian gas? Will you accelerate those efforts?
In a sense, we are already confronted with a situation where very high natural gas prices are affecting EU energy prices and is actually one of the main drivers of inflation. So from the European Commission side, we came with a set of possible responses which can be done at EU member states and EU level. Of course, short term, it's primarily about providing support to households and businesses who needs it. In more medium term, we're looking also at measures like, for example, joint EU natural gas procurement, strategic reserves in natural gas, and in more longer term, you know, according to the goals of European Green Deal, we are going to phase out fossil fuels, including natural gas.
Executive Vice President, given your talk with a lot of leaders in the world and, of course, the intelligence gathered, do you think Russia is bluffing, or are they really preparing to invade Ukraine?
Well, you know, it's a question which is difficult for anyone to respond and to say with certainty. We often had seen that Russia's actions, Putin's actions, are often opportunistic. They are ready to go as far as, in a sense, they are allowed to go. That's why it's important that the Western world is now concentrating and taking all the necessary measures to prevent and dissuade Russia from further aggression.
All right, Valdis Dombrovskis, thank you so much for joining us today, the European Commission Executive Vice President and Trade Commissioner. Now, coming up, much more to dissect on the markets. Barclays Chief European Economist Silvia Ardagna joins Bloomberg Surveillance Team. That's coming up shortly. Of course, we'll have a full roundup of geopolitics and why it's not really weighing on markets' movements today. This is Bloomberg.
energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to the Open, everyone. We are 55 minutes into the European trading day, and we're seeing a nice little lift off to a lot of these European stocks. Now, amongst the earnings to watch, and there's a lot of earnings later on in the U.S., UBS profit beat expectations. It did raise its provisions for litigation. Shares were rising as much as 7.5%. So UBS, a big one to watch here in Europe. But then we had some PMI manufacturing data outside of the EU and the UK, and it points to a stronger economy and happy Chinese Lunar New Year, Tom.
Yes, you know quite a lot, and you helped coordinate the red. So we've got the lucky red on for the year of the tiger. You're talking about the earnings, and you pointed this out, just worth underscoring, 80%, as you say, of S&P companies have come in above estimates. The profits are also looking good as well. UBS coming out with a banging set of numbers. We're looking ahead to Amazon, Alphabet. That's really interesting. Then there's this Tesla story, away from the earnings. Fun. This kid, 19-year-old kid in Florida, basically holding Elon Musk to ransom over his charting of Elon Musk's private jet. Elon Musk says he's not having any of it. He was going to pay $5,000. The kid asked for $50K. Not getting it.
Yeah, and apparently Elon Musk then blocked him on social media. I mean, it's amazing, actually, that you're able to track, because it does feel like a security threat. We interviewed him, actually, this 19-year-old college student. He said, look, he hopes that Elon Musk comes back to the negotiating table. He also wants to now open a company that does this, like, you know, tracks flights of rich people, which, again, I mean, maybe.
Yeah, legitimate security concerns, you would wonder. But he wants to buy a Tesla or pay for his school fees, that's what he says.
Yeah, I mean, certainly it could be a lucrative business. That's it for the European Market Open. Surveillance Early Edition is up next. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. You know, there's a huge mismatch in supply and demand. Prices are high. You know, prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
Everybody's making their own analysis if it comes to inflation. Geopolitical tension, that's more difficult.
With Russia's continuing its buildup of its forces, we are ready no matter what happens.
Well, either my right honourable friend had not read the rules, or didn't understand what they meant, and others around him, or they didn't think the rules applied to number 10.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Johnson under fire once again. A report criticizes failures over Partygate as the Prime Minister faces growing Tory fury. The diplomatic fury over Ukraine continues while Blinken speaks to his Russian counterpart after a sharp clash at the United Nations. And UBS beats on net income. The Swiss lender raises litigation provisions. We're live from Zurich this hour. Now, first thing is first, let's check in on the markets after we had that rally in the NASDAQ, filtering through to some of the European stocks, and actually the European financials also doing quite well. So if we get into the markets, I can tell you exactly what's going on. You can see financial services, one of the biggest gainers in today's trading session. UBS actually gaining some 7.5% just a short while ago. Now, the picture overall for European stocks is one of gains. We have a lot of earnings, and my fact of the day is that 80% of earnings so far in the U.S. either beat expectations or came in line, which is why we're seeing more banks saying now is the right time to buy the dip. UPS, you can see gaining some 6%, and then this is a Bloomberg commodity index. Always a good idea to look at what it means for commodities, given we have OPEC plus a little bit later on, and of course, given the tension over in Ukraine. We just had a good and robust conversation with the Executive Vice President of the European Commission, Mr. Valdis Dombrovskis. Now, the picture overall is, of course, not only does the wall of worry not go away, and I'm thinking of Fed hikes, but also the fact that Omicron is still large. So we'll see how it plays out over the last couple of days, whether a lot of the volatility infects some of the stocks or whether it's a pure currency play. Currently, you can see the UK and the Ftse getting some 0.8%, similar gains or higher gains actually for the DAX, the Ftse MIB in Italy, and the CAC 40 in France. Now let's get into the key market drivers with our markets editor, Christina Kino. Christina, it's very clear that markets, seem to like what they saw in the NASDAQ yesterday, but can they hold on to these gains?
That is the $1,000,000,000,000 question today, isn't it, Francine? But it is definitely looking to be a slightly better week for risk assets. I think there's a number of things contributing to that. As you mentioned, the NASDAQ rally overnight definitely helping risk sentiment here in Europe, as is the UBS results that we're seeing today, and definitely flowing through that financial sector in the SOX 600 as well. And of course, part of that story is, of course, the expectation for more rate hikes from both the Bank of England and even the ECB, even though the latter has insisted that they're not going to be doing that, not until 2023, but markets are starting to believe that less and less. And yeah, I think also the combination of the fact that most of China markets are out for the rest of the week, given the Lunar New Year holidays, means that there is room to breathe in these markets this week. Yeah. The question is, how long do we have for that breathing room to last? Perhaps not until the next catalyst
catalyst, which would be potentially the Fed rate hike in March.
So, Christine, how much of the focus, of course, will be on U.S. earnings? I mean, we have a lot of earnings today, especially some of the tech earnings. And once again, given what we're seeing with the Fed, does it put in play that 60-40 portfolio game?
Well, Francine, I think investors will definitely be watching these earnings, particularly for signs of how these companies are dealing with some of these real-world issues that central banks are having to contend with as well. I'm talking, of course, about inflation in particular. How are those margins doing? How are those supply chain issues going? We did hear some relief from Apple last week talking about how the easing of the supply chain issues definitely providing some relief to the market. So, is that a theme that continues for all companies, not just Apple? Because, of course, Apple is in a league of its own, being a kind of cash-rich sort of company. But is that the same case for some of these smaller companies? Are they seeing the similar easing in these issues? And, of course, margins and how that's being impacted by inflation, very, very important to watch as well. And, yeah, some of these kind of macro themes are playing out in earnings, definitely would be very key to watch for this week.
Yeah, thank you so much. Our markets editor there, Christina Kino, with the very latest, of course, on what we're seeing out there. Now, happy Lunar New Year to our viewers. Welcome to the Year of the Tiger. Markets closed in China, Korea, and other Asian countries. Now, tens of millions of people plan to travel for the holidays despite high levels of COVID in some countries. Now, here's our morning must-read from Bloomberg Opinion's Mark Gongloff on the U.S. and China. And Mark writes, though it may be condescending and leaves the toilet seat up even after you tell it 1,000,000 times to put it down, the U.S. is still China's most important trading partner. A little more self-sufficiency could not hurt or couldn't hurt China, but shutting down this symbiotic economic relationship would actually lead to stagnation and unrest. So to talk about the markets, but also this odd and fraught relationship between the U.S. and China, joining us now is Silvia Ardagna, Head of European Economics Research at Barclays. So Silvia, thank you so much for joining us. First to the markets, and actually what we're seeing out there is an uneasy relationship with what the Fed does to fight inflation. Have you had to revise up your calls for Fed hikes, and what does that mean for some of the European research you're doing?
Hi, good morning. Not recently. We have not changed the Fed call, really in the short term. We were expecting the Fed to signal a rate hike coming in March, and we have 3 more in the rest of the year with some quantitative tightening starting in May. Now, for the European implications, we continue to think that Europe is in a different business cycle stage relative to the US, and so we don't have a hike from the ECB this year. We actually have it later on in 2023. Clearly, we are seeing inflation remaining higher and more persistent than we thought, but we think that second-round effects are not evident and wage growth remains pretty lackluster. We will have some increase in wage growth, but it will come only later on in the year when wages begin to be renegotiated in various countries. So I think the ECB has time to remain patient.
Silvia, what does it mean for actually, a policy mistake that we could see from the ECB? Where would it come from? And to our point about the Chinese Lunar New Year, is this the biggest risk to Europe that actually China does a policy mistake and we feel the effects here?
Look, for the ECB, the euro area is growing well. Finally, we have got back to a pre-pandemic level of GDP, but we are not even back yet to pre-pandemic trends. So I think, erring on the side of patience is certainly being a more cautious approach than hiking soon to curb inflation. Obviously, inflation is also going to have, and high energy prices are a negative terms trade shock for the euro area, so households will be affected by that, and we have revised our growth forecast, penciling in a deceleration of growth at the turn of the year. On China, what we see is that actually Chinese policymakers are trying to relax monetary policy to try to, bring back, growth at a higher level than we had last year. So again, we don't see in our baseline case a policy mistakes on the card.
Silvia, are we underestimating, though, the impact on supply chains and also the fact that, China has not really gotten a handle on Omicron and what that means for policy from authorities?
Definitely, supply chain bottlenecks are a risk that inflation can stay higher for longer if the zero-tolerance policies will mean more closure of factories. But it's important to note that actually supply-side bottlenecks seems to be doing a bit better. We got the PMIs this morning, and if you look at the details of the releases, there seems to be some easing, at least for European manufacturers.
All right, Silvia Ardagna, thank you so much for joining us, Head of European Economics Research at Barclays. She stays with us. We'll talk about the UK and the Bank of England. Coming up, the UK Prime Minister Boris Johnson faces fresh fury from his own Conservative lawmakers after a report into partying in Downing Street. We're live from there shortly. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is totally the decision of the management of each company after carefully taking all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's individual circumstance and decisions.
You also have very favorable comments about the book from Henry Kissinger and Bill Gates. Who's smarter?
Each would say the other guy, and I think I would say each in their own ways.
Boy, you should go into politics or diplomacy. Okay.
But firstly, I want to say sorry. And I'm sorry for the things we simply didn't get right, and also sorry for the way that this matter has been handled.
But we now know that 12 cases have reached the threshold for criminal investigation, which I remind the House means that there is evidence of serious and flagrant breaches of lockdown.
So either my right honourable friend had not read the rules, or didn't understand what they meant, and others around him, or they didn't think the rules applied to number 10. Which was it?
I told him that I thought he should think very carefully about what was now in the best interests of our country and of the Conservative Party. And I have to tell him he no longer enjoys my support.
Well, some of the fallout there in the UK's House of Commons following the publication of Sue Gray's report into lockdown parties. Now, let's get more with our Lizzie Burden, who's at Downing Street. So, Lizzie, will this be enough to convince more of Johnson's own MPs that he's just got to go at this point?
Well, Fran, we're outside Downing Street where those parties took place. They were in the report, but it wasn't able to be published in full because of the overlaps with the criminal investigation by the Metropolitan Police. And you ask how it's going for Johnson. Well, in the Commons yesterday, he had MP after MP from the opposition benches calling for him to resign. But what was more surprising was his Conservative predecessor, Theresa May, asking him whether he was either stupid or arrogant, effectively, and then a raft of Tory MPs asking him, are they fools because they followed the COVID rules, attending their relatives' funerals? But it doesn't seem like he's going to resign anytime soon, nor do we have the 54 letters of no confidence that it would take to force a vote on his future. So for now, Johnson is fighting to keep the focus on how he's going to rebuild the operation and get on with government.
I mean, it just seems, you know, crazy that it's business as usual. Lizzie, we had a great report by Eurasia saying, look, after another bruising day, a lot of MPs will be meeting behind closed door to decide the future of the Prime Minister. He actually, Mishraman of Eurasia, gives it a 75% chance that the Prime Minister is out by the end of the year. Is that what people are telling you as well?
If there's a chance that he's out by the end of the year, it all depends on the timing. We've got the local elections coming up in May, and then we've got this mounting cost of living crisis in the UK that's set to peak in April, when you've got rising energy bills and rising taxes. So it's likely that the party is going to want Johnson to take the flak for that. But we may see the new leader in and debuted at Tory party conference by October. It's just we've got these two front runners, Liz Truss, the Foreign Secretary, and the Chancellor of the Exchequer, Rishi Sunak, who's going to come out the stronger appearing frontrunner.
Yeah, and we have a great BOE chart. Actually, the BOE hawks signal the first back-to-back hikes since 2004. What does it mean for traders?
Well, traders and economists now almost see it as a certainty that we're going to have a rise to 0.5% on Thursday. But really, traders will be looking out for clues as to how fast and how far the Bank of England is going to tighten over the course of the year. We'll maybe get a clue from that from the inflation forecast, but we'll be listening very carefully to the governor's explanation of Thursday's decision. If he emphasises the cost of living crisis, that could signal that they're worried about the immediate impact of tightening on consumers. But if they emphasise the risk of a price-wage spiral, that would signal that they are going to tighten faster through the year, and that will bring about active quantitative tightening faster.
Wonderful. Thank you so much. Our Lizzie Birding there at Downing Street. Now back with us is Silvia Ardagna, Head of European Economics Research at Barclays. Silvia, away from the political turmoil, which is actually not impacting the markets, first of all, should it be impacting the markets, or is it really all about the BOE?
Look, I think it's all about the BOE, as you say, certainly for trying to figure it out how fast and how far the Bank of England will hike this year. In our own forecast, we expect a hike, obviously, at this meeting and another hike in May, and then a pause. And a pause which is due to the fact that the economy will decelerate. This because of the energy bill hitting on consumers, but also because of the potential tax hikes that should come with the budget announced in March. So perhaps the only extent to which political events could matter from an economic perspective is really on what happens to the budget. For now, we are factoring into our forecast tax increases.
Yeah, and I think, Silvia, that UK two-year yield actually touching 1%. What does it mean for the sequencing of what Bank of England can do? How many hikes are you expecting this year, and what does it mean for bond buying?
Well, we expect 2 hikes now, one at this meeting and one in May. So what it means that starting from February, the Bank of England is not going to reinvest maturing securities, and there is quite, a significant amount in February itself, right after the decision. But then the question is whether the Bank of England will hike more and bring the rate to 1%. If that happens, which again is not our base case, then at that point, the balance sheet begins to shrink. So the Bank of England will de facto start selling some of the securities that are in its balance sheet.
But how difficult is it actually to pull off quantitative tightening in a way that doesn't upset the markets? And could the Fed then look at the Bank of England to have an idea of how to do it right?
Look, in our forecast, the Fed will actually do it starting in May. So maybe the Fed will be the leader in this perspective. And, there is a global component that of risk premium that percolates across markets. So if the Fed quantitative tightening were to impact not just the long end of the U.S. Treasury curves, but also that of the, obviously, the Bank of England and financing conditions were to become too tight through this global factoring, maybe that's actually a case for, other central banks not to follow with the same type of policies. But we'll see. Again, our base case is really predicated on the fact that the economic outlook will be softer next year, and that, the second half of the year, and that inflation will actually fall by then.
Yeah, so Valerie, our queen of charts, was reminding me, I think the Bank of England said they will actively be a seller of bonds, whereas the Fed will actually, had said that they will allow them to roll off. Sylvia, give me a sense of actually how worried you are about the real economy in the UK, given the cost of living is increasing quite a lot, and that's hitting households at a time where also the Prime Minister is fighting for his political survival. So will the Bank of England increase be politicized?
Look, without, central banks are independent, and they actually, respond to inflation or economic conditions based on their mandate. So we don't think that is going to happen. We think that it's more likely that the government will take some measures to ease the impact of high energy prices on low-income households. At the average level, there is still a pretty large buffer stock of excess saving that has been accumulated during the pandemic. The problem is more a distributional issues, that these savings are not, in the hands of the low-income households, which are the ones who are more affected by the energy bill. So we think some fiscal policies that redistribute income, so the tax hike could also finance part of these, transfers to low households.
All right, Sylvia, thanks so much. Sylvia Ardagna, there, head of European Economics Research at Barclays. Now, coming up, the U.S. and Russia's top diplomats are set to hold talks today over Ukraine. We have that story next. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the U.S. Secretary of State Antony Blinken and his Russian counterpart Sergei Lavrov will speak by phone today as diplomatic efforts continue to reduce tensions over Ukraine. Well, joining us now is Bloomberg's Maria Tadeo in Brussels for us. So, Maria, Russia bracing for sanctions, but is that going to deter Vladimir Putin?
Well, Francine, that is what they're hoping. And, you know, in the interview that we just did with Valdis Dombrovskis, the idea is to hit every sector, even the inner circle. And remember, the United States says that potentially even Vladimir Putin could be hit by those sanctions to make the price so high for Ukraine that not even Russia is willing to pay it. And what they say what happened in Ukraine in 2014 is going to be nothing to the full package that we're going to see. Now, it's interesting that we're having this call today between Blinken and Lavrov. I would also point, Francine, that yesterday Vladimir Putin and Emmanuel Macron had a call on Monday night. This is the second call they have in 48 hours, and the Russians are hinting that perhaps there could be an in-person meeting between Emmanuel Macron and the Russians. It's interesting because the Russians do perceive that France is a Russophile country. It's a country that they can do business with and that they can have a dialogue. Whether or not that means that perhaps they're going for a soft spot remains to be seen.
Right, and Maria, I guess the million-dollar question is how do you inflict with sanctions maximum pain on Russia without hurting the European economy?
And it is for the Europeans, and I think they are pretty much aware now that this is going to hurt, and the question is how much, but also is Germany going to play ball? Now, again, in the interview that we just did with Valdis Dombrovskis, he did acknowledge that there is a conversation about how to minimize the risks, that Europe has come to terms with the idea that this will hurt, but of course, we're in the middle of winter. We know that right now we're hooked on Russian gas, and right now, this whole talk about the Green Deal and moving into renewables is just not there enough. We're still very much dependent on that gas.
Yeah, I have to say, there's also a beautiful opinion piece by Javier Blas looking at, Ukraine, and there's a contained scenario, and then there's a nuclear one, and he really just tries to answer the simple question, would Vladimir Putin dare? Thank you so much, Maria Tadeo there in Brussels. Coming up, UBS announces a $5 billion buyback after posting better than expected results. More of interview with the chief executive, Rolf Hammers. That's coming up next, and this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy?
Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Johnson under fire. A report criticizes failures over Partygate as the Prime Minister faces growing Tory fury. The diplomatic fury over Ukraine also continues. Blinken will speak to his Russian counterpart after a sharp clash at the United Nations. UBS beats on net income. The Swiss lender raises litigation provisions. We're live from Zurich this hour. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London. Also, for our Asian and Chinese viewers, Happy Lunar New Year. Now, let's get straight to the markets. A number of countries, of course, in Asia have been closed because it is the year of the tiger. It's the first day of the tiger year, and they will remain closed for the rest of the week. The focus firmly on a lot of the technology stocks. This is after we saw that rally over in the NASDAQ and European stocks opening higher. Again, some Federal Reserve officials actually cautioning against faster than necessary policy tightening. U.S. companies also signaling another strong earnings season. In fact, out of all of them, 80% of earnings either beat expectations or match them. So we're seeing a nice little liftoff overall for these stocks. And then UBS beating expectations, gaining some 5.8%. So UBS announcing a $5 billion buyback after posting better than expected results at the investment bank. Bloomberg's Manus Cranny spoke to the chief executive, Ralph Hammers.
We have ended the year in a very good way with a core tier 1 ratio of 15%. We have a model that keeps generating capital. Our growth is capital light. We don't need a lot of capital to grow. We want to keep a strong balance sheet. However, we do have surplus capital. If you have surplus capital, it doesn't need to be used for further growth, then you should redistribute it to your shareholders. And that's why the message is there today.
Progressive is the word that's used around the dividend and payout. In terms of how the market sees you, are you trying to push out ahead as the payout bank of choice?
Not necessarily. I think what we are looking at is literally our strategy. So the market was waiting for, okay, where's the strategy going? Our strategy is to build that global ecosystem for investing. Now, building that ecosystem with our clients, with new contributors, does not need a lot of capital to grow. We grow it. It will grow in income. It will need some capital. It generates a lot of capital. Now, if it generates a lot of capital and it grows, you can do two things. You can continue to pay a handsome dividend and redistribute to your shareholders if you have a capital surplus situation. And that's what we do.
The market says 4 or 5 rate hikes. What do you believe they will do? What do you believe the market can take in terms of rate hikes without a major implosion?
It's exactly that number, I think. So otherwise the market wouldn't be expecting it, right? It's almost kind of a logic reasoning in itself. But I actually think it's about,
So just to be clear, you're going for 5 to 7?
Sorry?
You're going for 5 to 7 rate hikes?
No. This is the 4 to 5.
4 to 5.
That is exactly what is priced in the market as we speak. And I think the market can take that. And I think the Fed is just waiting for the market to have really assumed and absorbed that, and then they may do it. or they will do it. So basically, they are signaling it will be coming, the market is adjusting, and then they will do it. And clearly, maybe towards the end of the year, depending on how the inflation actually develops, they may either do more or less. From an inflation perspective, I actually think 2020 will be a year of two halves. In the first half year, still high inflation, but because of then hopefully decreasing tension in the supply chain, decreasing tension in the labor markets, and a more balance between the demand coming from COVID savings, for example, that from that perspective, hopefully also supported with some monetary policy there, that the inflation will be down and under control towards the end of the year. So I think it's going to be a year of two halves here.
Okay, let's see how that plays out. But inflation plays out in wages. Christian Saving is seeing an increasing war for talent. Are you?
I think we're all in the same market here, right? So where we see some pressure on our workforce, we see it in the U.S. We see it in a bit in wealth, Asia Pacific, because we are the leading wealth manager in Asia. And we see it in investment banking across the globe, in the banking sphere. Now, clearly, we pay competitively, we pay for performance, we have the talent to make our plan, and to the extent we need to pay up, we will do so, as we have done so last year. Having said that, we have a very good and attractive culture to work in as well. So I think there's more recipes than just pay to make sure that the people stay.
But if I look at the bonus pools around the world, Deutsche Bank up 15%, Goldman's, JP Morgan 40 to 50% up. What kind of percentage do you see the bonus pool at UBS rising this year?
I can't give the percentage yet, but it is increasing.
Well, 2020 was up by 24%.
Yeah, it is not as much as that this year. It is about paying for performance. That is what is important. And if people perform, they get paid well. And if they don't, they don't. Now, clearly, the market has done really well. We have done really well in the market, so the pay is up.
Are you paying to hire? I'm thinking in wealth, the sign-ons in investment banking and wealth management. I'm just curious, are you paying more to bring in? Is that where the pressure is versus retention?
We are looking at retention here.
Well, Bloomberg's Manus Carney there speaking to the UBS Chief Executive, Ralph Hammers. Manus joins us now from Zurich. Manus, it was a great, comprehensive interview. One of the things that really stood out for me is how much they'll invest in, of course, this automated wealth advisory, which they want to, put globally. How will that change the bank in 3-5 years?
I think this goes to the heart of the cost-to-income ratio in the United States of America, where whilst it's been coming down, it's still much heavier cost burden for UBS in America relative to their peers. It's at around 80%. They've set some new cost-to-income targets. So robo-wealth, depending on where you sit, $250,000 through to $2 million, Francine, this is the evolution of wealth management in the United States of America. They've delivered the highest pre-tax profit since 2006 on a net income basis. The markets business actually bolstered the wealth management business, and that is rotation, according to Hammers, preparing to rotate for inflation. So the capital markets business actually did a little bit better than the wealth management, where there was that deleveraging in Asia. But you're right, this is a shift. This is about him putting his stamp on this bank 1 year into his tenure in the seat, post-Armati. This is an acquisition, $1.4 billion, and he's ready to do more. Yeah. But at the same time, do you know what, Fran? I was just watching the T Live, and on that he talks about actively looking at Europe and their presence here in Europe. That's very Jane Fraser. Prepare to pull the ripcord on certain geographies and certain businesses.
Yeah, which is why you end up with this $1 billion in savings, actually, that the market seems to like. I know there's also a debate, yes, Manus, amongst analysts in saying, look, are these new financial targets ambitious enough for UBS, given what we heard today?
Exactly, and I did provoke him with that. I said, I've had a look at these, Ralph. I said, they're not ambitious. I mean, are you just playing it safe?
He chuckled.
Came back at me and he said, he chuckled, but he did come back with a riposte. So well done to Ralph, which is, look, it's not about playing it safe. It's actually about one of the series of risk hazards in the next 3 years. And interesting, his view on inflation could unseat that. Yes, you get a tailwind with net interest income, which is 100 basis points. I tried to get the seven rate hikes out of him. You know, the Jamie Dimon, Ralph Hammer spread, 5 to 7. He wouldn't go there. 4 rate hikes gives you an interest rate hike of 1%, $1.5 billion. That's the tailwind. The risk is, of course, that inflation and wages run away. Bonus pool at UBS, it's not going to be up by 24%. Hey, we actually got a news line there.
Yeah, so he basically said, you know, it won't grow as much this year, so well done for pushing it, you know, on him or trying to get an answer from Manus. But it's amazing to see, you know, the difference in that, and they can still attract top talent compared to some of their other European rivals that have more legacy issues and really at the forefront of some of the scandals again.
Francine, I have, as I'm sure you have, a number of people who work in a variety of institutions that have deferred stock from not too long ago, and it's not worth an awful lot. So what you're looking at here is a stock which is up 7.5% this morning. It's being rewarded. So as he said, there are other things apart from just pay, but I would challenge that within banking that keep you in an institution. It's pay, it's ethos, it's bonus, it's retention. It is about retention. This time last year, or in the spring of last year when we caught up with him, he was talking about junior banker pay. Now it is firmly and squarely about retention. And it's about bolstering that narrative to people to come and work with you. So let's keep an eye on it. It sounds as if they're clearing the decks on the French litigation. I'll just square off with this, Francine. This is about de-risking. So when you make the provisions, it gives you that ability to be a little bit more risque, dare I say it, on buyback and dividend.
Manus, thank you so much. Manus Mccartney there. Great work in Zurich. Also wrapped up warm with a beautiful background. And remember, you can get the latest on UBS earnings reactions on our Top Live blog. It is fantastic, that together with Manus's interview on TLIV Go on your Bloomberg terminal. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gareth. Hi, Leanne.
Hi, Francine. Australia's central bank is scrapping its 15-month-long quantitative easing program, but says the move does not imply a near-term increase in interest rates. The Aussie dollar and bond yields whipsawed after Governor Philip Lowe pledged to remain patient in assessing inflation pressures. And I bet loads of you are playing this game right now. Wordle has been bought by the New York Times. The price was not disclosed, but the newspaper says it paid in the low 7 figures for the popular daily game, which gives players 6 tries to guess a 5-letter mystery word. The company says Wordle will initially remain free to new and existing players, raising concerns it may eventually go behind a paywall. And that's your Bloomberg Business Flash. Francine.
I can't live without Wordle. I love Wordle because you can only do it once a day, so it uses your brain, but actually not too much, so it doesn't distract you with anything else, Leanne. So it's fun, Wordle. Well, we can have a Wordle off after being on TV today. Coming up, U.S. futures rise amid a risk-on European Open. We'll get deeper into the markets conversation. That's coming up shortly, and this is Bloomberg.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. This week, find out how CFO Luca Zaramella is using local knowledge to help Mondelez grow its global portfolio.
I know our people, I know our customers. We tend to believe that all consumers are equal. They are not.
Chief Future Officer, brought to you by Workday, Wednesday on Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, European equities rising this morning, tracking gains in the U.S. Tech stocks extending a rally after the Nasdaq jumped the most since March on Monday. Well, joining us now, our MLive editor, Eddie van der Walt, and our Quick Take correspondent, Alex Webb. Of course, what I'm really thinking about is Wordle, because we're just talking about 5-letter words, and I don't know whether we could describe the markets through the Wordle prism. Talk to me a little bit about technology. So it's all about games after Sony bought a pretty sexy video game player.
Yeah, so we've seen Microsoft spend a huge amount of money on Activision. Sony's responded with a smaller deal, but still a $3.5 billion deal for Bungie, which ironically had quite a close relationship historically with Microsoft and Activision. So I saw one analyst note that compared it to your enemy dating your ex-girlfriend, which is, perhaps an appropriate analogy, but it's something that, Sony really needs to chunk up to compete with Microsoft, which owns Xbox and competes with its PlayStation.
I mean, it's games that even I knew. This, when you look at technology, so you put that to one side, and then when you look at the markets, it's still, the same concern about Omicron, what the Fed does in terms of hiking rates.
And I think this week is going to be all about the central bankers, right? We've got the BOE, we've got the ECB. I think it's going to be all about that, and just about how much the central bankers are willing to push back on the hawkish narrative that the market is building, because the market has really run away with the hawkish pricing. The Fed is tilted somewhat hawkish, but the market is, looking at 5 rate hikes this year. Now, if we see some paring back of those rate hike expectations, perhaps we also see a bottom coming in for the Nasdaq.
Yeah, the thing is that earnings are so good. I think 80% of companies in the U.S. either beat expectations or actually were in line with expectations. So that would be supportive for stocks.
It will, absolutely. And the big question now is, whether we see the inflationary narrative, whether that moves on to the jobs market. And, we've got the jobs data, we've got jobs data later in the week. It really just depends on whether the central bankers are willing to go along with the ultra hawkish narrative in the markets. And at the moment, we are seeing some of them pushing back, right? We're seeing Bostic, we're seeing with George pushing back, and a few others just saying, look, perhaps it is not, we're not going to slam the brakes on the economy. Right. And in that case, then stocks are, perhaps underpriced at the moment.
And we have earnings actually from Alphabet today, which will be interesting also because of the valuation. Are we going to see more regulation this year?
Well, we're seeing some things on the European level where they're trying to push things through on the US level. There's obviously a huge amount of moving parts in US politics at the moment. With the earnings later, Google, in a sense, is quite sometimes an interesting lead indicator for consumer spending because, of course, it is essentially an ad tech stock. It's brands trying to encourage people as they open up wallets to spend money with them and not with someone else. If people are spending considerable amounts more money on advertising, it means they're particularly bullish about consumer spending. If they're not, well, then the inverse is true.
I mean, I love speaking tech and putting it, compared to, for example, what the commodities index is doing. So we have OPEC Plus, and when you look at the general direction of the markets, it means completely ignoring what's happening in Ukraine or any geopolitics.
Oh, absolutely. The commodity markets, I think, have been a really good diversification play this year. We've seen just commodities in general doing well throughout the big drawdowns that we've seen in tech and so on. And I think that probably continues. I think there will probably be this decorrelation that will continue. And there's still the overhang, the supply chain worries and so on. And OPEC's doing a fairly good job at balancing the market.
And when you look at supply chain constraints, actually, I don't know whether Apple, I mean, do we say Apple managed its supply of chip makers and so that impacts the rest of the technology so it'll be easier to access, or you just put Apple in another category because they're so big?
Yeah, it's very hard to sort of gauge the rest of the market by Apple, often because Apple has a very efficient supply chain machine. It gets first dibs on components for a lot of the suppliers, and it says, if you don't give us first dibs, then we won't come back to you. It's the sort of things you hear from sources. So Apple, yes, managed to overcome a lot of its supply chain problems, not all of them. And it wasn't able to sell as many iPads, for instance, as it had wanted to, because it was diverting components towards the iPhone. So it wasn't as bad as it expected, but it wasn't completely resolved.
All right, on Chinese New Year, we have to wear red. Where was the memo for Eddie and Alex? Eddie, a lot of actually markets, red face. There you go. Let's not hope that's the case for the earnings. What are we seeing? A lot of markets actually closed.
Yeah.
And I don't know whether, you know, at the forefront we'll still see this U.S.-China trade relationship.
Right. And one market where I always love to see the Lunar New Year play out is the gold market, because gold demand really dries up in the 2 months after the start of the Lunar New Year, and I think that could be the same this year again. But one big thing is that now we're pushing towards higher rates, and we're pushing, you know, towards just a stronger dollar as well. Yeah. All of those things should be negative for gold as we go into the year of the tiger.
The year of the tiger, with maybe more regulation coming from China? Perhaps?
Well, I mean, a lot of these tech companies aren't even in China, so they've already cracked down quite severely on their sort of domestic tech companies. I guess the concern is more about supply chain, that if their supply chain gets problems from the US, then they retaliate and make it harder for some Western companies to do business there as well.
Yeah, but gaming is quite big in China, right? And they crack down significantly on that. Is that Chinese?
Yeah, and Tencent is the biggest gaming company in the world. But we are seeing now that actually all the players are starting to get into that space when it comes to, because they recognize that gaming is a building block for virtual reality and for the metaverse. And so increasingly these players, Apple and Google and Facebook and Microsoft and Sony and Tencent are butting heads with each other.
I really want to know if they play Wordle in China as well. I don't know that. This is my own question. I'll try and answer that.
A five-letter word will give you a lot more space in China, right? If you use Chinese characters, you could get an awful lot more into it. So
like a sentence.
Yeah.
Eddie van der Walt, of course, from our MLive team. He's editor and quick take correspondent. Alex Webb, thank you so much for joining us. Now, coming up, Moderna's COVID-19 vaccine gains full approval from the US FDA. We have the details next. This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now, Moderna's COVID-19 vaccine has received full approval from the U.S. Food and Drug Administration for people aged 18 and over. The shot, which goes by the broad name Spikevax, has already been given to tens of millions of Americans since its emergency authorization over a year ago. Well, joining us now to discuss all of this is our Bloomberg Intelligence Senior Pharmaceutical Analyst and EMEA Director of Research. He is Sam Fazeli. Sam, I have a million, first of all, good morning, but I have a million questions about some of the approvals, what we're still waiting for, and what we got so far. How big a deal is Moderna?
Yeah, I mean, Francine, good morning to you too. It's the second now full approval for a vaccine. What it means for Moderna is that they can now market the vaccine. People can buy it privately, at least in the US. So it does change the dynamics a little bit. People can go and get their doctors convinced to give them a 5th and 6th and 7th and 8th shot if that's what they want. Okay. But what in reality means is that it might make life more difficult for other vaccines now that haven't been approved yet to go through the emergency use authorization pathway.
So we're also seeing Pfizer asking for approval in vaccines for the under 5s.
Yeah, so that's been something, remember a couple of months ago they had some data saying, well, maybe the 2 shots of this lower dose wasn't good enough in terms of antibodies, we need a 3rd dose. It seems to me now, given that we're seeing quite a meaningfully higher number of younger kids in hospital, that they're being encouraged to go and just get that approved. By the time they file and all that, they'll get their 3rd shot data.
Sam, where are we? Is it really turning into an endemic? I know there's also, studies suggesting that the Omicron variant means that you're then less likely to be protected next time around. So it's not likely to stop reinfection.
It seems like people who get a mild infection, which is what we want, from Omicron, have lower levels of antibodies than if you had a mild infection of Delta or a severe infection of Omicron. So given that most of Omicron infections appear to be milder, that might mean that we have got less of an immune response. But remember, the question that they need to answer still, and I've just been reading the paper, is that the same for vaccinated people?
Right.
Is that the same in terms of actual protection? Because here we're talking about antibody levels. That's not necessarily the same as protection.
So I was going to ask you, how many people need to be vaccinated in terms of percentage of the population? If we stick with Omicron, I don't know if there are new variants, for it to become an endemic.
Yeah, I'm pretty sure that we still have to be at the 80-90% level to get to that.
And we're not there yet.
No, especially not in the US, which is where the brunt of the problems are occurring at the minute.
All right, Sam, thank you so much. Our Sam Fazeli there looking at everything with Omicron. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kay Lines are in New York and Edwards in London. A full market roundup, of course, coming your way. Now, the focus firmly on what the Fed will do, on what the Fed has indicated. We had a number of new speakers saying they will not hurt the U.S. economy. Does that point to the fact that they may not do 50 basis points hike in March? And then this week, it's a big week for central banks. We have ECB and we have the Bank of England now priced in another increase in rates from the Bank of England. This is Bloomberg.
Of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, But many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada. Tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is a really uneven global recovery.
Clearly with a tightening monetary policy that's going to make things more difficult for equities. But, you know, it's still a year of decent economic growth that we've got ahead of us.
Markets now need to correct to some level of normalcy, and that's what we're seeing.
I think there's a lot of opportunity in some of the tech stocks that have gotten hit.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Tuesday, February 1st. Our top stories today. UBS beats estimates thanks to better than expected results at its investment bank. Now Switzerland's largest lender will boost a share buyback program and upgrade profit and efficiency targets. U.S. stocks end January with tech stocks driving the biggest two-day rally since 2020. After the closing bell, we'll get results from Google parent Alphabet. And a flurry of diplomatic activity on Ukraine. Russia's foreign minister and U.S. Secretary of State will speak by phone. Russia is set to respond to U.S. proposals on how to de-escalate the crisis. And Prime Minister Boris Johnson heads to Kiev, putting aside for the moment his own crisis at home. Welcome to the program, everybody. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London, Matt Miller and Kaylee Lines in New York. And Kaylee, so January ended with a flurry to the upside in tech stocks, and globally then we narrowed down that loss on global equities from 7% to 5%. The direction in January was pretty clear though, wasn't it? Let's see what February brings.
I think a lot of investors were very willing to bid January farewell, Anna. The question is, will February look better? Of course, we don't have a firm idea from that in Asia overnight, considering it's not just February 1st, it's also the Lunar New Year holiday, and that means China, Hong Kong, South Korea, Taiwan, the Philippines. A lot of regional stock markets in Asia were closed today. Japan was higher, and of the other regional benchmarks that are higher, you did see them moving in the right direction. The MSCI Asia Pacific Index up about 0.4%. There were a few other noteworthy stories in the region overnight, one being in India, the country's finance minister announcing spending plans that would bring the deficit to about 6.4% of GDP. That is a wider deficit than expected, and you really saw that showing up in the Indian bond market, where the 5-year yield moved up about 10 basis points to just south of 6%. And of course, the Indian rupee is also the biggest underperformer in Asian FX, weaker against the dollar by about 0.25%. Elsewhere in FX, though, I would point to the Aussie dollar, stronger to the tune of about 0.2 after the RBA ended its QE program, but sounded a lot more dovish, Matt. They say they're going to be patient, and just because QE is over doesn't mean a rate hike is coming right away.
All right, very interesting
interesting stuff to follow, and a really interesting setup in the U.S. market this morning as well. We have futures down. It's only a slight drop, 0.3%, but the real yield coming down to 73 basis points below zero, and we were climbing up to 50 just a couple of days ago. Gold coming up, 1806 a troy ounce right now. We're watching it closely because, as we learned from Eddie Vanderwalt yesterday, after the Chinese New Year, you don't have all the buying, all the demand that you have out of that incredibly populous country. And then Bitcoin, a red arrow here, but it's slightly misleading because we climbed up to higher levels in yesterday's session. Right now, 38,234 is what we're seeing for the digital currency. Anna?
Yeah, Matt, European equity markets then doing their best to try and ignore the downdraft we're getting from those US futures. So European stocks moving in the main to the upside, some decent gains coming through in some of these markets. Yes, technology to the fore, but also the earnings story and very much the banking sector. Financial services, the best performing sector here in Europe today. That's on the back of those numbers from UBS and the broader narrative from UBS. The UBS stock price up by 6.6%. Yes, they had to take another charge on litigation, but there's also the profit targets and forecasts that they've set themselves for the years ahead. They seem to have been well received by the market, and of course the share buyback going down pretty well. I put in here Ubisoft as well. This listed in Paris. It's a game developer, and this is all to do with a story that has nothing to do with Ubisoft on the face of it. This is Sony bidding for a US game maker, but it certainly gets all that chatter around consolidation in the gaming space. Such a hot topic of conversation within the gaming space, of course. Consolidation, that very much to the fore, and Ubisoft up with the sector really, but up by 1.9%. I've also got the euro in here. A move to the upside in the euro as we head towards that ECB meeting in a couple of days' time. 112.57, up by 0.2%. It's really interesting to watch what's happening in terms of the bond market action. Just in yesterday's session, the Bund, the short end, so this is two-year Bund yield, moving up by 8 basis points in just one session. I'm told by those in the market that is huge, quote unquote, for that particular market, and certainly worth watching as we get the German inflation data coming in hot, the French inflation data coming in hot. How long does the ECB hold the current line? That will be the question later on this week, Kaylee.
Yeah, market's definitely waiting to hear from Christine Lagarde coming up on Thursday. But before we can get through Thursday, we have to get through this Tuesday. And there is a lot coming up, including U.S. data with ISM manufacturing. That'll come at 10 a.m. Eastern time. We'll also get a number of earnings, including from automakers. I know Matt Miller is excited. General Motors at 4 p.m. New York time. And also after the bell, tech earnings will continue. Alphabet is next on deck, Matt.
All right, we'll definitely be watching. We're going to preview those a little bit later in the program. Right now, I want to get to European bank earnings, rolling in with the results from Switzerland's biggest bank. UBS announced it's boosting its share buyback program and upgrading key profit and efficiency targets. Bloomberg's Manus Craney spoke with the CEO, Ralph Hamers, as the bank balances payouts to investors with the need to retain talent.
We pay competitively. We pay for performance. We have the talent to make our plan, and to the extent we need to pay up, we will do so, as we have done so last year. Having said that, we have a very good and attractive culture to work in as well. So I think there's more recipes than just pay to make sure that the people stay.
Manus Craney joins us now from Zurich. And Manus, the market seems really focused on the buyback. How significant is the number?
It's pretty colossal. To rob Anna Edwards of her phrase, it could even be deemed as huge. They're going to be back in the market tomorrow with another $5 billion to buy back this year. So last year, 2.6, another 5 this year. That gives you 7.6 billion in terms of buybacks, the highest profit, pre-tax profit since 2006. The investment bank led the charge on this significant beat because they're preparing to rotate for more volatility, preparing to rotate for more inflation. But this buyback and the dividend narrative, to quote Ralph Hamers, is about delivering a handsome dividend policy. They made more provisions on the French litigation, and that, in his words, de-risks. It lifts a little bit of a cloud. Yes, it's $1 billion of provisions for litigation, but it does give you some more clarity about the path to higher payouts, higher dividends, and a better trajectory on buybacks.
Good morning to you, Manus. It always looks cold there in Zurich. What did Ralph Hamers have to say about client risk appetite then, and that important topic of inflation?
It's interesting, Anna, they do this survey and the sentiment is, as you could well expect, they are a little bit hesitant, but it's geopolitics rather than inflation which tops the agenda in terms of concerns. But it's so difficult to trade, as we know, to hedge, to position on geopolitics. When it comes to inflation, it is the elephant in every room, from wages to investors. It's causing the rates traders to reposition. But client sentiment has de-risked in Asia, which is reminiscent of what you heard from Credit Suisse last week in terms of leverage, trading, etc. But the sentiment I got from Ralph was, look, this can really turn on a dime, and more especially in Asia. I think at the end of the conversation, it's a CEO who's coming into his own stride. He's just spent $1.4 billion on wealth force in the United States of America, the robo-advisor. It's the way forward, everybody. Take the emotion out of those investments and let the robo and the algo do it for you. So we're beginning to see the evolution of the Hammer era, which is about bolt-on acquisitions, $1.4 billion done. But does it translate to Europe and to Asia? That's the question that I have. And he's reviewing his current structure in Europe, which is very reminiscent of Jane Fraser at Citi. Guys.
All right, Manus Craney in Zurich for us. Thank you so much, and great interview. Well, Manus was talking about emotion there, and it certainly was an emotional month for equity investors. But U.S. stocks ended a volatile month with the biggest two-day rally since 2020, and beaten down tech shares powered that late rebound. Alphabet and Facebook do report in the next couple of days, so bulls will be hoping for a repeat of last week when Apple and Microsoft rallied after strong results. Let's get more with Bloomberg's Danny Berger. Danny, January ended pretty well, but it was a really ugly month. How does that set us up for February?
Yeah, it's hard not to get whiplash in this market. And you could maybe take some confidence from the past 2 days, as you say, the best since 2020, but still it was an ugly loss for the month. We did slice it in half, but that doesn't exactly instill confidence, considering it might be some of the month-end oddities of window dressing, stocking back up on tech, considering your weighting would be lower just as a function of it selling off in those Apple earnings as well. I think Jim Reed over at Deutsche Bank puts it really well when he says, until the Fed and market expectations for interest rates stop leapfrogging each other, we will continue to see volatility like this, of this whipsaw in market. Now, this spells trouble, not just if you're a tech investor, but if you're, for example, using a strategy where you have stocks and bonds, 60-40, because tech is so heavily weighted in indices, that's going to sell off. That long duration play does poorly, and bonds sell off as well. We saw it play out in January, the worst month since 2020. And to look at what this is going to do going forward, you only need to look at 2018, only the second year on record to have fallen for 60-40. That, of course, was when the Fed was tightening. So it's not just an issue with tech, it's an issue for multi-asset investors as well.
Yeah, well, it's an issue also for retail investors who don't have time to look up anything else but fall back on the 60-40 portfolio. Hey, it's a crucial week for a couple of really broadly held stocks. We're going to get Alphabet earnings, for example, Google, one of the biggest in the world.
Yeah, you have Alphabet, Google, you have Meta, Facebook parent on Wednesday, on Thursday, you have Amazon. This is the quarter that Dan Ives over at Wedbush calls the most important session in at least a decade. And that's because of the wreck that we've seen on tech due to rising interest rates. Well, can they pull it out of the bag? Can we get a repeat of last week when Apple and Microsoft earnings did well enough? Of course, the drivers for Alphabet are going to be different. It's going to be all about that ad revenue. Cloud is going to be important as well. You know, I was talking to Sophie Lund-Yates over at Hargreaves Lansdowne that said, yes, we did see Google sell off so far this year, down more than 6%. So the valuation picture is a little bit better, but it's still lofty considering its history. And at the same time, last quarter, it had really stellar earnings. So the bar is high. Good is no longer good enough, Kaylee.
Yeah, even though valuations are down at 2020 levels, that's still about, what, 30% above the 10-year average. So thank you so much to Bloomberg's Danny Berger. Now over to geopolitics. More high-level talks on Ukraine are set for today. U.S. Secretary of State Antony Blinken will speak by phone with his Russian counterpart, Sergei Lavrov. Let's get more on this with Emily Wilkins of Bloomberg Government, who joins us now from Washington. So, Emily, there seems to be a little confusion heading into these talks about Russia's response to the U.S. and NATO's papers addressing Moscow's demands. Dmitry Peskov, a Kremlin spokesman, said they haven't set the response yet to the U.S. on security. It was a separate document on a different issue. Where exactly are we as these two foreign leaders get set to talk today?
Well, it really looks like the U.S. is taking several steps on different fronts. I mean, definitely with diplomatic, the fact that you do have Blinken and Lavrov speaking again today after they spoke so recently at the end of last week shows that there's continuing diplomatic communications between the two of them. But you're also seeing the U.S. continue to move on sanctions. You have U.S. senators say that they are close to reaching an agreement on going forward with potential sanctions, not only if Russia invades Ukraine, but simply on Russia officials right now. There's also been more movement on the U.S. telling government families in Belarus that they need to leave and evacuate the country due to the buildup that they are seeing on the Russia-Ukrainian border. So on multiple fronts, the U.S. is really addressing this, both through diplomatic, through sanctions, and then taking those preventative measures to make sure any Americans who are in the area are able to either be safe or leave now.
Emily, thanks very much. Emily Wilkins of Bloomberg Government joining us there from Washington with the latest on the geopolitics. Now, speaking of that geopolitics, Boris Johnson will be heading to Ukraine today to meet with its president. That's amid his political battle back home, of course, where he's under fire from his own conservative lawmakers after the civil servant Sue Gray put out her report, but only part of it. Let's get more with our UK economy reporter Lizzie Burden, who joins us now from Downing Street. Lizzie, what is the mood the day after we heard from this much anticipated Sue Gray report? Of course, it wasn't as complete as it might have been because of ongoing police investigations.
That's right, Anna. I'm here in Downing Street where the Johnson's cabinet is currently meeting to discuss the Ukraine situation. But this is also the place where those parties took place that are in the report and have thrown his premiership into jeopardy. Johnson is trying to focus attention on how he's going to rebuild the operation and get on with government. That's what he was trying to do in the Commons yesterday after the report came out. As you say, it wasn't released in full, only in part, but even the redacted version angered some of his MPs. There was a seismic intervention from his predecessor, Theresa May, when she effectively asked whether he was stupid or arrogant. Then another Tory MP asked whether they were foolish to follow the rules when they went to their grandmother's funeral. And then MP after MP from opposition parties called for him to resign. It doesn't look like that's likely anytime soon, and we still haven't had the 54 letters of no confidence that would force a vote on Johnson's future. So for now, he clings on.
All right, well, all eyes will be on the results of that police investigation. Thank you so much to Lizzie Burden, our UK economy reporter. Now let's get back to the U.S. markets and take a look at some stocks moving in pre-market trading. One mover to the downside is PG&E, the utility company, and this is after it was reported overnight it's offering a unregistered block trade via Morgan Stanley, so it's down about 2.7%. Moving to the upside, though, is Spotify, and of course, this follows a big gain for the stock yesterday, up 13.5% in the Monday session as it tries to address the issues around Joe Rogan's podcast and vaccine misinformation. It is adding to those gains today, up about 1.5% before the bell. And another mover to the upside is NXP Semiconductor. Of course, this is the second largest chip provider to the automotive industry. It reported a very bullish outlook after the bell last night. It's up about 0.8% in early hours this morning. And shameless plug, Anna, I will be talking to the NXP CEO along with Guy Johnson later on this hour, and we'll ask about those supply and demand dynamics and if it does look like it might be getting better in the second half of the year, Anna.
Not at all a shameless plug, important information. Now, coming up on this program, Kathleen Brooks, Minerva Analysis founder, will join us. We've seen quite substantial moves in European bond markets over the last 48 hours or so. We will talk to her about that. What does that tell us about the ECB? And we will, of course, focus on tech. It is a big week for tech rallies as we await earnings from Alphabet. More from Hoxton Ventures partner Rob Kniaz. He joins us later this hour. Plus, later, an exclusive interview with Philadelphia Fed President Patrick Harker. That's at 8:30 a.m. in New York, 1:30 p.m. in London. This is Bloomberg.
did Delta fundamentally change the sort of infrastructure of hospitals and medicine generally in India, or was this just a short-term phenomenon and things reverted back to the mean?
So it did change. I think from a preparedness standpoint, how the hospital infrastructure sort of geared up for it, and whether it was oxygen requirements. I think most hospitals have put up liquid oxygen plants, temporary plants. Some have put up permanent plants. I think the capacity for oxygen and other, medicines and supply chain has been augmented, enhanced. So from that standpoint, I think there's been expansion in capacity in infrastructure. We've all sort of seen how far we can stretch the envelope.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Earnings season is here.
It has been brutal.
A little bit of disappointment in some of the early reporting.
Bloomberg is fastest with the numbers and analysis.
This is a mighty crash.
What to buy and what to run away from.
Bloomberg, the fastest numbers and analysis you trust.
Welcome back to Bloomberg Surveillance, the early edition. I'm Matt Miller with Kaylee Lyons here in New York. Anna Edwards with us out of London. We are simulcast on Bloomberg Radio and Bloomberg Television. And we always or often focus on the MLive blog. Today I was scrolling through it, or this morning around 2 a.m., and I saw some really cool tick data that speaks to something traders always complain about: algorithms, computers, buying and selling in the market. They've been doing a lot of selling of late, but if you look at the tick data, which is the upticks minus the downticks from the New York Stock Exchange, you can see that that selling has trailed off. In fact, we see the most bullish tick data yesterday that we've seen since March of last year. Lynn Thomason, Bloomberg managing editor for EMEA Markets, joins us now to talk about this. So Lynn, it looks like the selling, the algo selling, has trailed off, and maybe that's a reason for the bullishness we saw yesterday.
Yeah, absolutely. I mean, I think, if there's one message you can take away from the past few days, and it's that dip buyers are back. You saw a tremendous rally the past couple of days in the NASDAQ, in everything that's been beaten down, and, really retracing some of the losses that we saw from last week. So I think that data just speaks to the fact that dip buying isn't dead yet.
Is that coming from reassurance? Good morning, Lynn. Is that coming from reassurance around the earnings story, or is it reassurance from some Fed voices? I mean, looking at what we heard from Daly and George talking about not upsetting the economy, not doing the unexpected, doing things gradually with discipline, is that the reassurance the market is moving on?
I'm sure it's some of both, but clearly, I mean, this is a market that's hanging off of every word from Fed speakers, and I think everyone's just trying to get a sense of, what is the Fed going to do? I think clearly Powell scared lots of people with this, message of hawkishness, and now you're starting to see Fed people say, well, maybe, it won't be so bad, and you're starting to see the doves come back. So I think that's tempering a lot of the concern that we saw last week.
And it's not just the Fed, BOE and ECB on deck on Thursday. Which one could bring the bigger news, Lynn?
Well, I think being in London, I'm going to have to say we're all closely watching the BOE. I mean, I think the market is pricing in 5 hikes this year. It'll be really interesting to see whether they continue this hawkish message or whether there's a bit of dovishness that comes into the picture.
Yeah, how does that hawkish message rub up against the cost of living that is moving in an upward direction? Lynn, thank you very much. Bloomberg's Lynn Thomason from the Markets Live team. And remember, you can get all of that Markets Live blog that Matt was talking about reading at 2 a.m. in the morning. It goes 24 hours, MLIV Go. That is the function to use on your terminal. This is Bloomberg.
the Omicron variant and the latest wave have an impact on not only consumer trends, but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
You also have very favorable comments about the book from Henry Kissinger and Bill Gates. Who's smarter?
Each would say the other guy, and I think I would say each in their own ways.
Boy, you should go into politics or diplomacy. Okay.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Time now for the First Word News, and Kim Jong-un has blasted his way onto President Biden's foreign policy agenda. In January, North Korea's leader conducted more missile tests than he did in all of last year. It may be a signal he is preparing to fire a long-range missile that can reach across the U.S. North Korea wants the U.S. to lift sanctions, while the U.S. wants an end to North Korea's nuclear program. The Winter Olympics in China may be more of a drag on Beijing's regional economy than a boost. COVID flare-ups and pollution curbs are weighing on consumer and industrial activity. Plus, a ban on public spectators means there won't be the usual bump up in tourism. The Olympics begin on Friday. And Bitcoin wrapped up its worst start to a year since 2018. The largest cryptocurrency by market value was down about 18% in January. That was as we saw a broad sell-off in risk assets on the growing conviction that the Federal Reserve will soon raise interest rates. And coming up, we'll continue the conversation on the Federal Reserve and global monetary policy with Kathleen Brooks, Minerva Analysis founder. This is Bloomberg.
Nuestro estudio, nuestro experimento, no hemos
pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And here is what you need to know. UBS has increased its share buyback program and upgraded key profit and efficiency targets. Switzerland's biggest lender will buy back as much as $5 billion of shares this year. Rising capital market and trading revenues led to better than expected results at its investment bank. US stocks ended a topsy-turvy month with the biggest two-day rally since 2020. Beaten down tech stocks led the way. After the bell, Google parent Alphabet kicks off another crucial week for tech earnings. The company's advertising and cloud businesses are likely to be firmly in focus. And more high-level talks on Ukraine set for today. US Secretary of State Antony Blinken will speak by phone with his Russian counterpart Sergei Lavrov. Russia says it has yet to respond to written proposals from the United States and NATO on how to de-escalate the situation. That is a look at what you need to know this morning. Matt, as we head towards the start of the US trading session, what is in focus for you?
Well, I'm really looking closely at currencies, but before I get there, let's look at the futures. Down a little bit after the almost 2% gain that we had yesterday. So the last day of January, seeing a flurry of buying activity. We'll see what February holds. The dollar index is down right now. And if you look at the euro and if you look at the pound, they are up against the dollar. But the dollar is also down against the gold price and really against Bitcoin as well. The arrows here are kind of arbitrary because, of course, Bitcoin trades 24/7. And right now it's over 38,000. Remember, yesterday morning it was 37,000. Friday it was 36,000. So a horrible month, but it's sort of clawing its way back up. So I'm watching the dollar against commodities and currencies very closely today. Kaylee, what are you watching in the pre-market?
Well, one commodity you didn't mention, Matt, is oil, which is actually moving to the downside on the day to the tune of nearly 1%, and that is weighing on some energy-related stocks in pre-market trading. The likes of Devon Energy down 1.5%. You have the likes of Marathon Oil and Occidental also moving lower. To the upside, though, semiconductors. They had a huge day yesterday. The SOX index was up about 5.4%, and those gains are continuing today. NVIDIA up 7% yesterday. It's adding to that gain, up another 1.5% this morning. And NXP Semiconductors, ahead of its earnings, was up more than 8%. It then reported after the bell last night, and those earnings or those gains are continuing this morning, up about 0.8%. They are still seeing robust demand that is outstripping supply, Anna. That means their revenue forecast was a lot stronger than anticipated.
Yeah, absolutely. A focus on those supply and demand dynamics as ever. European equity markets doing pretty well to hold their heads above water, factoring in yesterday's story on Wall Street. Yesterday, you mentioned the strong run for semiconductors there, Kaylee, and we've certainly seen technology to the fore here in Europe. Also financial services to the fore, and that is clearly demonstrated here by the SOX 600 Financial Services Index, up by 2.4%. UBS is a big driver of that. We spoke to Mccartney earlier on. He was giving us the top line on UBS. The buybacks clearly going down well with investors, and and the fact that they have the numbers themselves and the forecast they've given themselves in terms of profitability for the years ahead. Ubisoft up by 2% over in Paris, a games developer. We've seen Sony go after a completely different company in the games development space, but as a result of that, the market thinking once again about where would we find takeover targets within the gaming sector, and so that is certainly a sector to watch this week as we talk a lot about tech and the future of tech. And we've got the euro in here as we head towards the ECB meeting. More on this in just a moment, but the euro getting gains today. We saw an 8 basis point move higher in short-dated German debt yesterday, in the yields there, sorry, and that really, as a result of that really strong German inflation data today, we've got the French inflation data coming in higher than expected. How does that reshape our expectations, Matt, around the ECB as we head there on Thursday?
I got to say, the euro dollar is killing me. You know, I sold a vehicle in Germany in euros a couple of days ago, and we were down at 111. It hurts. The video game story, I think, is really interesting. You know, we covered this a lot in my program yesterday. I recommend viewers always tune in at 1 p.m. to watch Bloomberg Markets. Sony buying Bungie, which is the creator of Halo, which basically started the Xbox, is so fascinating to me. It's also kind of the predecessor of Call of Duty after Microsoft buys Activision. So the video game war's really heating up, and obviously I am following that very closely. My gamer tag is Shower Fan. Now, joining us is Kathleen Brooks, founder of Minerva Analysis, to talk more about something more serious and macro, the Fed, the ECB, the BOE. Kathleen, what is your expectation? I guess the main question is for inflation this year. Do we see it cooling off in the second half, allowing central banks to, or allowing them not to be as hawkish as they may have had to be?
I think that's a really good point, and that's what the market is expecting. Inflation will peak sometime around the spring, and it will cause a shock for it to take longer than that to peak. So what we could see is that the hawkish central banks, the ones that are straight out of the gate, they're going to be the ones that are going to start backing away. The Fed, for example, they've massively shifted their policy stance, and they're really going great guns on inflation right now. The second half of the year, they may scale that back. Likewise with the Bank of England, but that will be probably at the time that the ECB is starting to ramp up and starting to play catch up. So there'll be a lot more divergence, or a switch in the divergence, as we move towards the middle of the year.
Kathleen, good morning. Yeah, let's talk about that divergence and how far behind the ECB can afford to get, I suppose, in terms of its timing. And it might be very warranted for it to be behind based on labour data and inflation dynamics. But the inflation surprises keep coming in Europe, don't they? And we've seen the German bond market reflecting that. The German 2-year yield is now above the ECB rate for the first time since 2015. Are we going to see, we've got a chart that shows this, I think, and are we going to see the markets just continuing to test the ECB's statements or commitments at this point that they are not minded to increase interest rates this year?
I think so. I think certainly as we lead up to this meeting in the short, very, very short term, we can see a hell of a lot of expectation that the ECB is going to start joining the Bank of England and their friends at the Fed. Right now, though, what we are seeing, what the ECB has to measure up, is the fact that they may want to push things back to governments. You pay for the extra energy bills. You support consumers through this energy crisis because we can't do this. This is an international crisis. That's what we've heard from Lagarde before. I think it's going to take quite a lot for her to change her tune. I do like the idea of a more hawkish ECB. I just don't think it's a story for today.
Not a story for today, but when does it become a story then, Kathleen? Because at the same time we have these inflation surprises to the upside for the ECB, we then get gas prices coming down because of more flow of gas from Russia through that Ukraine pipeline. It gets incredibly complex to try and work out where the energy component goes in the second half of this year.
Oh, absolutely it does, and I think that's a really, really good point. If Russia does step back further, then we could see inflation come down a lot more than we currently expect. There is an expectation that the ECB will start hiking rates by the end of this year. It's a very small hike. Maybe that will be pushed up. Maybe if we do see a bit of a shift from the ECB this week, which we think is unlikely, people will start pricing that in to come in earlier, actually, and there could be even 2 small rate hikes priced in for this year. I think it's going to take quite a lot. Inflation, even though it is beating surprises, it's still moderating from December. So that could be what Lagarde points to this week.
Of course, Kathleen, the market has been a lot later to arrive at tightening expectations for the ECB than it has been for the Fed. We actually started seeing all of those kind of Fed trays playing out at the end of 2021, including a stronger dollar. Do you think we've already seen peak dollar strength?
I think it's going to be a tricky one. I think that the euro, even though it's had a really good pullback the last couple of days, I still don't really like it. I don't like it as sustained strength, particularly against the dollar, particularly against sterling as well, particularly as we in the week that we're in. I think that we could potentially move to that kind of 125 level in the sterling euro rate before we start to pull back. And I think that will come in the spring, so that over the next kind of 18 months, I think we are going to see a bout of euro strength. We've had this 12-month, or coming up 12 months of dollar strength now. I think it will shift to the euro, but I think it won't happen right now. It's going to take a little bit further, particularly if the ECB, this is a critical meeting, but if the ECB maintains its dovish stance, I think that's where you'll see the euro fall back. And it may not even keep up with the interest rates that we're seeing and the bond market, for example.
Do you expect that we'll see greater FX volatility as we move forward through these potential tightening cycles, Kathleen?
I think we've seen quite a lot already. I think we've seen some big levels, particularly in the dollar index, particularly in sterling. I think there is more FX volatility for sure, but actually what we've seen is volatility come down a little bit in the FX market. If you look at, even things like the Turkish lira, for instance, which I know we're not talking about, but that's a lot less volatile now than it was a year ago. I think that the market is focusing on interest rates. That's where a lot of the volatility is right now. That's obviously been infiltrating into the stock space, as we've seen with the NASDAQ and particularly in tech stocks, but we're potentially seeing a bit of a recovery there now. I think we're probably in for a less rough month, or a less volatile month in February than we were in January, purely because a lot is priced in already.
Kathleen, thanks so much. Thanks for joining us here on set in London. Kathleen Brooks, founder of Minerva Analysis. Thanks to Kathleen for joining us. Coming up next, she just mentioned the tech story. We will discuss that in more detail. What do we expect from Alphabet earnings? We will talk to tech investor Rob Nyes of Hoxton Partners. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
From New York City. We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
story. How are you thinking about those dynamics?
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Investors will have plenty more tech earnings to digest this week, with Alphabet leading the way after the bell today. Google's parent is expected to report gains in advertising and in its cloud businesses. Joining us now is Rob Nice, founding partner at Hoxton Ventures, and he's also a former Google product manager. Rob, nice to speak to you. Really good to have you with us on set here. I'm really interested to see what moves markets here on days where we get earnings reports, because to a large degree, a lot of these companies, you're often looking at ad revenues, aren't you? But then there are also the future growth plans and where they get their growth from, 5-10 years from now. At the moment, are we just going to be really focused on those very near-term metrics around advertising? Is that going to be the big theme?
I think it's a combination. I think people are looking heavily at the cloud performance, particularly around Google and Amazon, to see how well they're moving to the cloud, as well as Microsoft last week. These companies are staking a lot of their future gains on the penetration of cloud, which is really where it's more interesting. The ad tech is shorter term and obviously more near and more fluctuating.
Okay, in terms of future bets, I'm really fascinated by the metaverse, especially as we navigate the return to work or don't return to work. When are we going to start seeing that kind of thing come through in results? And are Google and Amazon going to be trying to take part in the metaverse as much as Meta platform?
I think every company will have to do something. It's still early days, though. These products are still quite early, and I don't really want to walk around my house with a headset on for 8 hours a day pretending I'm in the office. So I think there's a lot to be seen with how the products actually turn out.
Yeah, and indeed, and on that subject, virtual reality, I spoke to one analyst earlier on today who's saying, look, the sale of VR headsets at Meta platforms is just a rounding error right now, but it's going to get an outsized focus because of the way that the company has staked its future on that. Is that a business that can really grow without acquisitions, or is it all going to be about acquisition strategy in that space? Game makers, for example.
I think it'll have to be acquisition driven. I think these companies will have lots of innovation internally, but there's different direction things will go. And again, it's early days in the technology, and I think they're going to have to buy up companies like Magic Leap or other innovators in the space. You have to plant 1,000 seeds and see which ones actually work. And even the best companies can't predict the direction the market will go sometimes.
Well, and Rob, early days of technology, and usually as technology develops, it gets more regulated. How do you view the regulatory overhang on big tech right now?
Yeah, it's very interesting. I think there's a lot of headwinds from every government, every direction, and how to manage it. I think so far the companies have mainly managed to ride a fine line and manage some way to avoid really detrimental policy changes. But I think that's going to be hanging over their heads for years to come, and different governments will then progress and find different ways of coming after them. Google's facing even more pressure here in the UK around publishing, around paying newspapers for use of their content. I think that'll continue no matter what. People will be chipping away at the revenues of these companies.
Our London-based chart boss, Dan Curtis, is back in the office, and he put together a fantastic chart for us, Rob, on the Qs. We're looking at the biggest outflows for the tech ETF since the bubble burst in 2000. I think it's pretty amazing to look at that kind of selling. What does this mean to you? Is it a buying opportunity, or should we, head for the hills?
I think people are taking their gains to an extent in the rotation. These stocks have generally done quite well for the past 2 years. They're priced pretty heavily still, or a lot of the earnings are priced in, and there's still room for them to fall. So I think we'll know this week how they're holding up. There was a lot of, in particular in the ad space, there was a lot of questions around Apple's privacy tracking and how that's affecting Meta and Google both on mobile. Yeah, they're walking a fine line themselves, and if they can keep going and keep generating the growth, then they're in a good place. But I think there's still a lot of room for errors. Microsoft had a great quarter and wasn't really rewarded publicly.
Is there a sign for you as you watch these earnings roll out? Is there a flag for you that will give you a direction in terms of, okay, we need to wait for bigger drops, or now it's time to get back in?
Hard to say. For us, I think these are quality stocks in general, and these are foundational type companies that are, once in a generation type opportunities. So I think, there is a quality aspect to this where, these are the new blue chips as far as tech goes. And if you're betting on the future, you're betting on tech. So I think they're still quite a value stock to some extent, even though the prices are a bit higher, that they're still going to generate a ton of cash.
Well, Rob, let's talk about those higher prices, specifically in your role as a venture investor. How do you approach these really rich valuations?
It's hard. I think there's a lot of money on the sidelines still. If you look at the venture capital market and the private equity market, there's still a lot of money, dry powder sitting there in these funds. So to some extent, we're somewhat separated from the markets day to day, but you're already seeing some of the later stage folks worrying about multiple compression, worrying about public market exits. So, it does trickle down into the earlier stages of ventures. So, we're being cautious with valuations. At our area, we're very early stage investors. We're a bit more separated from the public markets, but we always have that in mind for 2 or 3, 4 rounds down the road. How will the markets respond to these companies and how good is their revenue?
And Rob, when you think about conceptually what we've learned about the role that tech can play in our lives since the start of the pandemic, it's been something of a revelation for many people, and tech has stepped into spaces that we used to rely on real life for. And with that in mind, what kind of step change in valuations do you think we should have seen since March 2020 in these tech names? Because as they pull back, that's the kind of question we have to ask ourselves, I suppose.
I think these are bona fide permanent changes in the world and how people work and how people think. So, to me, this is a reasonable expectation of outcome that, the world is changing fast, and these are permanent changes where people are working from home a lot more. They're hybrid working. They're using more online sites. They're ordering more online. I think, customer behaviors have changed. So to some extent, the valuations are justified.
Okay, Rob, thanks so much. Thanks for joining us. Rob Nyes, Hoxton Ventures founding partner, with his views on the tech space. And thinking about tech, coming up on programming, Alphabet CFO Ruth Porat. That's at 4:30 p.m. in New York, 9:30 p.m. in London. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. This week, find out how CFO Luca Zaramella is using local knowledge to help Mondelez grow its global portfolio.
I know our people, I know our customers. We tend to believe that all consumers are equal. They are not.
Chief Future Officer, brought to you by Workday, Wednesday on Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Everybody's making their own analysis if it comes to inflation there. But you can work with that. Geopolitical tension and the potential events coming from it, that's more difficult.
That was UBS CEO Ralph Hammer speaking with Bloomberg after the company released results that beat estimates. And of course, we're going to get a lot of earnings and economic data out over the course of today. Let's figure out what Tom Keene, co-anchor of Bloomberg Surveillance, is watching among all of that. Tom, where's your eye this morning?
10 a.m. this morning, ISM will be that first look. John Farrow tells me those are important numbers. I don't really believe in them, but Farrow says shut up and pay attention to them. So I will. What I know, Kaylee, is we're seeing a readjustment here, a tweaking of the view forward with a huge fog about Q3 and Q4 of next year. Jan Hatzius and Goldman Sachs put out a stunning note where they reset. Let's look at the reset in the chart. This is inflation adjusted, real GDP, the pandemic plunge, the pandemic recovery. Down we go to a pretty good sustainable level. That circle is 6.9%. That's a big, big China-like number. And then we fade out with a grim first quarter, according to Goldman Sachs, and we move on to a fourth quarter over fourth quarter, 2.2%, which barely gets it done. You wonder, Kaylee and Anna, you wonder, when do we adjust the Fed hike game?
Yeah, absolutely. The Fed hike conversation, no doubt, central. Tom, when John Farrow asks you to pay attention to things that you've no interest in, you can always tell him you're too busy playing Wordle, because this apparently is this huge, great, big phenomenon that now has been brought up by the New York Times. I don't know if you're a daily player. Certainly gets a lot of attention in my house.
Usually at parties, when Trivial Pursuit comes up, people leave the room if I say I'd like to play. I think the Wordle thing is great. I don't know if we have this yet. Brad, maybe we have this board, maybe we don't. But it was 27 days ago, the New York Times wrote up Mr. Wardle of Brooklyn, a software engineer, and his wife, Ms. Shah, and they invented this thing, and the paycheck Anna showed up yesterday.
Yeah, something in the 7 figures, the New York Times said. Pretty impressive. I already played Wordle today, for the record. Got it in 3 tries.
Did you get it in 3 tries?
3 tries, yes I did. Tom Keene, co-anchor of Bloomberg Surveillance, thank you so much for joining us. And other than Wordle, here's what else we're watching today. I am watching Alphabet earnings. Of course, the focus is going to be pretty much as always on that advertising revenue, also on the cloud, and specifically YouTube is catching analysts' eye. And of course, anything that goes for Alphabet in regard to advertising revenue is going to read through to Meta later on this week. So we'll see what kind of growth is seen in that segment in particular, and how that sets up sentiment for the broader tech sector as we try to start February off on a firmer foot than we were on in January, Matt.
Yeah, I'm watching something more traditional, and that's General Motors, but they're being tripped up to some extent by tech issues. Now, GM has done very well in terms of margins, obviously, because they can charge whatever they want for their vehicles right now. There aren't enough out there to meet demand. The problem is they can't boost the top line as much as they'd like because they don't have the chips necessary. I'm looking, for example, for a GMC Yukon or a Sierra 1500, and I can't find the one I want, and even the ones I find don't have the features I want because they don't have the chips to heat the steering wheel or move the lumbar support. They can't bring out their AT4X pickup truck because they just don't have the chips to make it run. So we'll be watching the earnings and the call especially very closely.
It is as if the whole world is conspiring against you, Matt, what with the movements in supply chains and the euro dollar not moving in your favor. We're all here for you. It does hurt. I can understand that. Something a little more serious now in geopolitics. We are, of course, watching developments on the Ukrainian-Russian border. President Putin will not be talking to Prime Minister Boris Johnson, according to the Kremlin. That was supposed to happen yesterday, of course, but Boris Johnson found himself busy with other things. Russia has not sent its response, they say, to the United States and NATO just yet. So we'll look for further clarification on that front. But we do know that Anthony Blinken and Sergei Lavrov are going to be speaking again. They spoke last week. Is all of this taking tension a little bit out of the situation? Oil prices have retreated just a touch, but the Bloomberg Commodities Index still near to those record highs. More Bloomberg Surveillance is ahead. An exclusive interview with the Philadelphia Fed President, Patrick Harker. Tune into that for more on the Fed and the inflation outlook. This is Bloomberg.
this chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Hopefully, the Fed gets this right. I think the chance of that is fairly low.
The Fed is in a very tight spot.
It's really going to be the data that's in the driver's seat.
People are going to get a little bit nervous about strong data because obviously the big fear is the Fed's going to be more aggressive.
Even with 4 to 5 rate hikes, the economy and strong earnings should be able to shine through.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good riddance, January. From New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Your equity market down 1/3% on the S&P. The equity bulls, TK, they want to restart the year.
Restart the year. Every once in a while, John, you have to go down. And let's remind ourselves, we didn't go down a correction as a general statement. We went down, but not all that far. Certainly not down like a bear market. It was an adjustment, which has given pause. And I think, John, it's really important that we've decided to focus today equity at the top of each hour.
5% lower on the S&P 500 through last month, Tom. Big adjustment in the Treasury market as well. And the guessing game around the Fed, that's what it is right now, TK. It is a guessing game.
It is going to adjust. Everyone's adjusting. Jan Hatzius at Goldman Sachs adjust, John. I know you saw that note, and it's really important that all of a sudden, suddenly the boom economy math is gone.
Goldman cutting their GDP forecast, Lisa. Free handle still, 3.2% for 2022, 3.8% consensus. You wonder how many people start to follow in the coming weeks.
The problem is that they might downshift their GDP estimates, but the inflation estimates are staying where they are. And this really creates a conundrum for the Fed, which is the reason why you've seen that flattening yield curve and the reason why the estimates are all over the place for what the action will be that the Fed members actually take.
Have you kept up with the Fed speak in the last couple of days?
I mean, let's be honest. I've looked at the transcripts and the stories. I'm not going to lie. I haven't watched it all. I think it's interesting because there is a paradox underlying a lot of what they're talking about. They want to slow the economy. They don't want to torpedo it. How do they do that? They want to slow the markets. They don't want to torpedo them. This is a really uncomfortable place to be, which is the reason why the turbulence that we saw in January, I'm sorry, good riddance, but there's going to be more of the same.
It's going to be messy, Tom. Morgan Stanley say the safety net of forward guidance from the Fed is gone, bottom line, and I think a lot of people would agree with that.
I think there's going to be a Fed adjustment. I have no idea what it's going to be, John, but as you've kept up with the parlor game more than me, 4, 5, 6 rate hikes, you wonder if it comes down to 3, 4 rate hikes.
Barclays at 3, Bank of America at 7, got this pack of 5 at 5. 5 hikes seems to be the consensus now in February 22. Let's whip through this price action. The S&P 500 slightly negative. We're down 12. We're negative 1/3 of 1%. On the Nasdaq 100, last month was ugly, down 8.5%. 1%. It could have been worse. We've just had the biggest two-day rally on the Nasdaq since November 2020. Looking at the bond market, yields come in a couple of basis points on 10s to 176. Lisa, the move on 2s year to date has been huge.
This is where the shift has been. It's really been that 5 rate hike expectation now baked into the market. What I'm curious about, though, is how Fed officials deal with what we're seeing in the yield curve. At 8:30 a.m., I am so excited for this. Philadelphia Fed President Patrick Harker is joining Bloomberg Surveillance along with our own Michael McKee. How do they view the fact that those rate hikes have translated into lower long-term bond yields, lower long-term inflation expectations? How do they justify this when they're trying to not torpedo the economy, just simply slow it down and bleed into inflation to create a more sustainable type of pace? At 10 a.m., we get a slew of data, the JOLTS job openings for the month of December. I am curious to see how much this actually comes down, and it is because what we're seeing with the Omicron variant, how much that's affecting the labor market. We're going to see the same thing when we look at the ISM manufacturing, and the data is it's expected to also decelerate. Again, how do you look at the Omicron variant? How do you factor this in when you start talking about GDP readings at the same time that inflation continues to remain high? And aftermarket, Alphabet's reporting earnings. This, of course, comes as Facebook is reporting earnings tomorrow, Amazon on Thursday. The year-to-date performance is very different for a lot of these big tech firms. I find this fascinating, John. How much do you start to see that differentiation really be the hallmark of 2022? And frankly, what can earnings justify in terms of valuations if this really is just a rate story?
Looking forward to those numbers a little bit later. President Harker clearly didn't hear your comments, Lisa, from yesterday on that Federal Reserve corruption of the yield curve.
Hold on a second.
As Lisa calls it. Lisa's marching back up.
I had to get over here, so I'm marching back over here so that I can comment. I wasn't saying that the Fed was corrupt. I wasn't saying that they corrupted it, but it has been corrupted by Fed policy. But carry on.
Have you asked Mike McKee to ask that question at 8:30 Eastern?
No. This will be a fun one.
Okay. Ben Laidler, global market strategist at eToro, joins us now. Ben, great piece on valuations. I want to read out this line from the note for our audience. PEs are still above the 5 and 10-year averages, as they should be. Ben, what do you mean by that, as they should be?
I mean that companies have never been this profitable. Bond yields are extraordinarily low by historical standards, and I don't think either of those two things are changing. I think they're very structural. Profitability may come down a little bit. Bond yields, may well go up a little bit, but by historical standards, by that sort of 5-10-year comparison, I think we're going to be more profitable, and bond yields are going to be lower, and therefore valuations are going to be higher. And the fact that with this pullback and with higher earnings, valuations are now less than 20 times for the S&P 500, I think is one of the many supports that this market now has.
Ben, good morning. Just as you come on air, we get the Ben Laidler earnings report from UPS. It's not Amazon, it's not Microsoft, it's not sexy, but I am stunned at the forward optimism of UPS. They hold margins, they raise the dividend, and most importantly to me, they pour on the CapEx to a new level. What does it signal when a logistical backbone of America shows earnings like that?
It tells you that despite all the angst, this is going to be a year in developed markets where growth is going to be close to double long-term average levels. And even next year, it'll be above trend. Now, those numbers may come down. I mean, we're going to have a little bit of an air pocket in the first quarter here with sort of all the Omicron disruption, but growth is very good. And these big companies can enjoy that and can weather the inflation pressures that they're seeing and, can pass some of that on. And those are the ingredients for this record high corporate profitability we're seeing. You've got strong top lines and you've got very resilient profits. Yeah. And just going back to the valuations, that justifies high valuations.
Lisa, I'd point out that the Ben Laidler bull market from Christmas Eve of 2018 is in the vicinity of 18.81% per year.
And which year were you in all cash, triple leveraged?
I've been in all cash the whole way. Laidler calls me up and says, Tom, get out of cash. Find an entry point. I haven't.
Ben, you were talking about the valuations and how you expect them to be sustained just because of the earnings and because, as you said, bond yields will remain low. How low do they have to remain to fortify this call of yours?
I mean, to put simple numbers on it, every 50 basis points of bond yields takes, about 9% off valuations, right? So I think bond yields are going up. I think valuations are going to come down a bit. I think that's where the pressure is. That's why I think, we are in this new regime I do think you need to be focused on those sort of cheaper bits of the market, those sectors and other parts of the world which are cheaper. And I am looking for earnings. This is why earnings are so important, because earnings are the offset to valuations, which I think are supported. But that's the valuations remain the risk, right? If the Fed keeps hiking and bond yields rise, and I take some comfort from the fact that corporates are continuing to deliver. The beats are naturally lower than they have been historically, which is, I think, what you'd expect, but they continue to come through, and the absolute numbers are, are very strong. I mean, 25% in the US, double that in Europe. I think these are great numbers.
Ben, there were a couple of surprises last month for me, and for many others too. On a geographic basis, EM, the outperformance there versus the US, 0.1, 0.2. On a sector basis, just the underperformance of the banks versus, say, energy. I would have expected those two buckets to do pretty well. Energy did fantastically. Banks didn't do anything for me last month, Ben. Can we just sit there for a moment, Ben? What happened with the financials? Why is that move on twos, 45 basis points worth, which is a monster move at the front end of the yield curve, not translating into a rally for the bank sector on the S&P?
Yeah, I mean, the 10 years sort of stalled out a little bit. And as you say, yield curve's been flattening. That's, not great for banks. I mean, we'll see how that sort of pans out. I mean, I don't think the banks rally's done, right? I think we're beginning to see loan growth sort of come through again as people get through their sort of pandemic savings. I think, the pressure on bond yields is for higher rather than lower. The Fed's not going to want to see a flat yield curve, and they have the tools to do stuff about that. I mean, as they begin to look down to wind down their sort of $9 trillion balance sheet sort of later in the year. And I would say it's as much the risk as it is the return. I take a lot of comfort from the fact that, the biggest insurance policy to valuations coming down here is sort of cheap valuations, and banks is the second cheapest sector in the market. Energy is still the cheapest sector in the market. Yes, that gives you room to re-rate on the upside, but it also, I think, gives you protection on the downside.
Hey, Ben, fantastic, as always, buddy. Ben Laidler of eToro. And to be fair, Tom, let's be clear, it still outperformed the benchmark, the S&P 500. It's just that seeing the banks unchanged on a month like last month, TK, with the move that we saw in rates, with the Fed rate hike guesses coming through the way they've come through, I just expected more, and many others did too.
Yeah, I agree. I totally take your point on it, John. John, this UPS announcement this morning is a bombshell. There's no other way to put it. It is absolutely stunning. They pull forward their 2023 view 1 year early. John, that's going to change the dialogue at every Wall Street firm.
Raise the quarterly dividend. The boost is 49% over the previous year as well.
Stunning.
Strategy driving strong momentum as we move into 2022. That's the commentary coming from the CEO this morning, Tom.
Yeah, it is really important, folks, and it's just a cardinal rule here. You really pay attention to the logistics of any given. So, John, you do the same thing in Europe, frankly, with DHL, but what FedEx does and what UPS does is a real bellwether for what's going on. And here, I would guess in the conference call you're going to see they've adapted, they've changed, they've done things within all the gloom that's out there to get things done, and it's a wow release.
That's your word of 22, Tom. Again, it was your word of 21. Corporations adapt, the adapt word. Can they replay the same story, TK, that they replayed through last year?
No,
they haven't had to do that for a long time. Can they do it again?
It's not that they're going to do it again. There's just going to be a different script, and I don't know what it's going to be, John. What I think is important is the John Hopkins people, the medical people, are telling us Omicron ends quickly. I don't have an opinion, but maybe they're beginning to adapt to that.
Lisa, that's the hope, isn't it? That's the hope.
The oxygen's getting real thin up at this valuation, and this is the concern, given the fact, given the fact that something's got to give. Either the economy is doing great, or earnings have to slow down.
Futures down 5, down 1/10 of 1%.
I'm not wrong. Am I wrong? See, look,
I'm not saying you're wrong. It's just,
how thin the oxygen is.
You two make me laugh sometimes. In the bond market, we're down 2 basis points at 175.90. Honestly, the trajectory of my career, I don't know when I had to become the sensible one on this. When did that happen?
Please
Euro dollar, 112.62. We're positive on that currency pair, 0.25%. Everything's relative, Lisa. From New York, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. More high-level talks on Ukraine set for today. U.S. Secretary of State Antony Blinken will speak by phone with his Russian counterpart, Sergei Lavrov. Russia said it has yet to respond to written proposals on how to de-escalate tensions. Meanwhile, the U.S. and the U.K. are preparing economic sanctions for Russian elites and their family members if Moscow invades Ukraine. Kim Jong-un has now blasted his way onto President Biden's foreign policy agenda in January. North Korea's leader conducted more missile tests than he did in all of last year. That's seen as a signal that Kim is preparing to fire a long-range missile that can reach across the U.S. North Korea wants the U.S. to lift sanctions, whilst the U.S. wants an end to North Korea's nuclear program. And Federal Reserve officials are showing little stomach for an aggressive 50 basis point interest rate hike next month. They say they want to avoid unnecessarily disrupting the U.S. economy. 4 of them made remarks on Monday. Kansas City Fed President Esther George said, quote, "You always want to go gradually in this economy." UBS has increased its share buyback program and upgraded key profit and efficiency targets. Switzerland's biggest lender will buy back as much as $5 billion of shares this year. Rising capital market and trading revenues led to better than expected results at the investment bank. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Earnings season is here.
It has been brutal.
A little bit of disappointment in some of the early reporting.
Bloomberg is fastest with the numbers and analysis.
This is a mighty crash.
What to buy and what to run away from.
Bloomberg, the fastest numbers and analysis you trust.
But with Russia's continuing its buildup of its forces around Ukraine, we are ready no matter what happens.
The words of the President of the United States a little bit later this morning at some point. Secretary Blinken holding a phone call with Foreign Minister Sergei Lavrov. Look out for headlines from that a little bit later with Tom Keene and Lisa Bravitz. I'm Jonathan Ferro. Your equity market down 0.2% on the S&P. On the Nasdaq, we're down 0.2% also. An ugly start to the year for the month of January, down 5% on the S&P 500, down 8.5% on the Nasdaq. It could have been worse without that two-day rally to close out the month. Yields in a couple of basis points on 10s to 175.90. That's your yield on a 10-year Treasury. In the commodity market, coming at 0.1% on crude at $88.05. Let's start with the big M&A story of the last 24 hours. It started as a love story, apparently. Wordle. This from the New York Times a month ago. Josh Wardle, a software engineer in Brooklyn, knew his partner loved word games, so he created a guessing game for just the two of them. As a play on his last name, he named it Wordle. And then the corporate media, Tom, brought the company yesterday, and most people fear it's going to go to the dogs.
Miss Shaw's killing it. I mean, let's go back to the January 3rd. How do you do this, John? January 3rd article. Bring it up, Brad.
Do you like that?
If you can. John and I are looking at the same article here. Amory Horton called me up at midnight and said, you've got to do this board here. I'm waiting for the board to come up right now. Well, I guess we're not going to get the board, John. But anyways, you're right. Miss Shaw and Mr. Wardle, they just
Isn't
killed
that beautiful?
It's just killed it.
In the low seven figures.
Yeah.
I'm very happy for Josh Wardle. Yeah. I think that's great. Goes off into the sunset. And then the game's just going to get... You just know, Lisa, the game from here on out is just...
But going to go straight downhill?
No,
honestly, it's just going to cost money. That's the key. I mean, it's just the pocket of joy.
The New York Times going to charge you to play a daily word game?
They're actually building out their games unit because that's one of their more profitable areas. Because once people get stuck, hooked on a particular word game... Look, I'm speaking from personal experience. I'm going to let this one go. But, you know, people will pay for that.
There it is. Wordle is a love story.
Yeah,
Isn't that? That's just beautiful, Tom.
It is.
Did you make a game for Mrs. Keene during lockdown?
No, you know, what is, but then, you know, with all the modern digital, what is this guy worth to another company? You got to go to him and say, keep it going.
True, Tom. True.
Okay. Let's go to Washington. The Queen of Wordle with us today, Emily Wilkins of Bloomberg Government. Emily, I don't know if the president's going to play Wordle today, but he says we're ready no matter what happens. You got to be kidding me. I mean, I know we got sanctions, and I saw that we have sanctions maybe against the Putin inner circle. What are we going to do ready no matter what happens in terms of boots on the ground in Ukraine?
Well, I already won Wordle today, so I am ready to report on whatever happens. But yes, in terms of boots on the ground, I mean, look, the U.S. has sent troops over there. Right now, the conversation, it really is around sanctions. You're hearing U.S. senators say they're hoping to finalize a bill this week that would put sanctions on Russia and Russian officials, not just when they invade Ukraine. There's going to be a level of sanctions for that, but even before then, because we were hearing from senators that they already consider what Putin has done to be worthy of sanctions. And as John mentioned, you know, we're definitely going to be waiting to hear headlines later today from that conversation between Anthony Blinken and Sergei Lavrov, their second one in the last week.
George Packer's out, I believe, in the New Yorker today, or the Atlantic. I can't remember which shop he's working for right now, with 20,000 words on the exit from Afghanistan. What has this administration learned over the length of the administration to get Ukraine right again about boots on the ground?
Yeah, that was a huge piece in The Atlantic, Tom. You know, it really goes into detail about this botched withdrawal. And you think about President Biden, we keep talking about his low approval numbers, and that really did begin with that withdrawal from Afghanistan. It hasn't been the only thing driving them, but it really shows that the American people are cognizant of what is happening overseas right now. And that's certainly something to keep in mind when you see how President Biden is going to be addressing and maneuvering his relationship with Russia, what is exactly going to be happening next. I mean, one thing that Americans consistently said they wanted is to get out of Afghanistan, to end the forever wars. And now here's the potential for Americans to get caught up in a conflict in a different part of the world, and not even the part that Biden wants to be focusing on. He really wants to focus on Beijing and China. So this could propose a really big headache for the Biden administration, depending what Putin does.
In the meantime, the signals are really unclear with respect to what direction these talks are going in. Unclear whether the U.S. officials have received a written response from the Kremlin to the proposal to de-escalation. And then yesterday, there was an order to withdraw some of the American nationals who are in Belarus because of what's going on with Ukraine and Russia. Is there any consistency to whether this is escalating or de-escalating?
Lisa, that's a really great point. I mean, you can point to some of the diplomatic discussions going on and say clearly there are channels open, discussion is still happening. You could point to the dispute at the UN yesterday, really sharp words from both the US and Russia ambassadors sort of, going after each other in a way you really don't see in these types of public forums. As you mentioned with Belarus, there's the withdrawal. They've already had a withdrawal from Ukraine for American employees who are there. And so, yeah, you are seeing a lot of mixed messages. The U.S. is trying to send a very strong and aggressive stance right now. They're really trying to show that they are willing to move and move quickly should Russia invade Ukraine. And so I think there's a question of how much of this is to a certain degree posturing and how much of this is because of serious concerns. Remember, U.S. intelligence said that if Putin was going to move, it would be in February, and here we are.
How significant is it for Sergei Lavrov to speak with Tony Blinken, given the fact that there is one person and one person only who makes decisions in Russia?
That's an excellent point. And I mean, we will be watching as well Putin speaking with other world leaders, including the Hungarian leader. He recently had another conversation with France's Macron. And so there definitely does seem to be that level of communication. But I think you're right. I mean, you can have Blinken talk with his Russian counterpart, but at the end of the day, everything everyone's watching for is what Putin is going to be doing.
Emily Wilkins, thank you, down in DC. Have you ever played the Bloomberg News quiz, Tom? Just thinking about building out gaming here at Bloomberg. You ever done that, Lisa?
Yes, of course.
Do you know who comes up really high up every single week?
Kaylee Lines.
Kaylee Lines.
Yeah, she's always
I was just looking at the firm rank. John Riley, over in operations in London, he's number one. Kaylee Lines is number two. They do a global breakdown as well of Bloomberg subscribers. Alex Schnapp of Cantor Fitzgerald won it last week, Tom. And there's a firm rank, so you know who the smartest firm out there is too. Kapula Investment Services. Their average score, 186.8. Do you think we should take this public, Tom? Lorcan Roach Kelly, our good friend, makes this game.
Yeah,
Maybe we should push this out public.
It's fascinating to me, seriously, John, I remember when it was a joke that these guys could get to 2 million subscription. No one believed it. Now they're measuring out to get to 10 million subscribers. That's what the New York Times is doing.
And games make it somehow stickier, Lisa?
Yeah, I'm going to create a game for my household, and we're going to compete, the two.
Are you going to retire after that? What would happen to this show if you retired? Honestly, don't go anywhere. Futures down 0.2 on the S&P from New York. This is Bloomberg.
this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
You also have very favorable comments about the book from Henry Kissinger and Bill Gates. Who's smarter?
Each would say the other guy, and I think I would say each in their own ways.
Boy, you should go into politics or diplomacy. Okay.